Boom. All right, yo. What is up for everyone on the replay? Skip about 5 minutes into the stream and you'll see what is about to happen. We get Amazon earnings in 7 minutes, Reddit earnings in 7 minutes. We have some other companies that are kind of important too. I guess we got, Ferrari came out this morning. I guess Ferrari's up 3% on the day. But yeah, a good chunk of my portfolio is reporting. I do own Reddit and I own Amazon stock. So that'll be very interesting to watch. Is anything else reporting? I don't know. We'll come back to this in a minute here, but I'm having one of the best days I've ever had in the market. It's rare when my portfolio on the kind of top right there, we are up 8.3% on the day or 3,500 bucks. It's specifically because we're really tech heavy. A lot of the tech heavy names have been doing phenomenal, like Comfort Systems up 11, Powell's up 12, Amazon's up 4%, but Amazon's about to report earnings. I'm very excited. If Microsoft is giving us a hint to what Amazon's about to report, Microsoft had some phenomenal cloud numbers. They're the second largest cloud service provider. We get Amazon as the largest cloud service provider about to report earnings. Yeah, check this out. We do own Microsoft. We own AMD. Actually, we own all these stocks on the screen here. And let me share with you my Webull portfolio before we get to earnings. I'll do a quick portfolio update. Good to see everyone. What's up, Kyle, Wookie? Hope everyone's having a great day. Yeah, we'll check out all these stocks. We'll maybe look at one or two before the earnings. And then after earnings, we'll deep dive into all the stocks you guys have in the chat here. But yeah, on the day, check this out. On the top right, we're up 3.55%. And open profit and loss since inception, since we started this portfolio, we're up 30.98% or 4,700 bucks. So not too shabby. Our main winner today has been AMD up 13, Microsoft up 15. Sprouts Farmers Market reported earnings. They're up 10%. Sprouts Farmers Market is kind of being out innovated by Amazon, Whole Foods, and Walmart that'll actually deliver the food to your house when Sprouts Farmers Market can't do that. And here are the stocks that are red on the day. Clear Secure is down a little bit, Southern Company, Robinhood, but that's no big deal. Our main AMD and Microsoft is sending our portfolio up 3.5%. And then we have a Robinhood portfolio. As we speak, we're at a new intraday high right now. We're up 0.98% despite our Meta position. We do own Meta, and Meta's earnings came out and they are down 8% on the day. They're doing pretty bad the past month. They're now negative basically 20% year to date. I'm actually looking to potentially buy more Meta. We're literally only up 1.9% on them, and they are by far our smallest position in here. But yeah, here's our lifetime percent gain on every stock. The only stock we're down on is actually McDonald's. We're almost going to be down on Meta if they keep up the pace here. Google's been our best performer. We're up 100% on them. This one's called my dividend only portfolio, where, as you can probably guess, every stock in here pays a dividend. Can we do hood earnings? Yeah, we'll look at Robinhood's earnings. I'm super I actually haven't even looked at Robinhood's numbers, and I do own Robinhood stock. They came out yesterday. I'm I'm on the Robinhood platform right now. I'm a big customer and a fan. I also have a Roth IRA with Robinhood, which is actually down on the day. We started our Roth IRA pretty much exactly a year ago. We're down 5% all time. We try and keep it simple. We just got 4 companies in here. The only stock we're down on is HCA Healthcare. It's the largest non-governmental hospital group. There's been some changes to Medicare and Medicaid that has made a lot of their patients who walk in now uninsured, and that's not good for their business model. But anyway, those are our, and then of course our Moomoo portfolio, where once you buy a stock in here, we never sell it. This is crazy. We're up 8.3% on the day. Open profit and loss, we're up 28K. And I just realized I didn't even show my performance in here. Yeah, we're up 1% on the day, but look at us the past year. We've still underperformed the S&P by quite a bit. We're only up 2.3% the past year, and we're still down 2% year to date in this portfolio. So anyway, yeah, in literally a couple minutes, literally less than 5 minutes, we get Amazon earnings and we get Reddit earnings. So I do own Reddit stock as well. We'll cover those in a couple minutes. So Kyle says SanDisk, please. Yeah, let's look at the memory shortage stocks. Wow, SanDisk is up 26% on the day. That's incredible. Well, it's been on a downtrend, so it's nice to see that. Maybe they've put in a bottom. This is your memory shortage play if you've heard of the RAM, DRAM, China just had this IPO. So China CXMT stock, which is now the largest Chinese stock by market cap, it's their biggest stock in history, is they just IPO'd as a new kind of memory competitor. But here's why, honestly, it's tough to be bearish on SanDisk. If we look at the PE ratio, or you want to do a forward PE, they only trade at literally 6.8 times next year's net income. I mean, it's hard to be bearish. That could easily stretch up to like a 9, 10, 11, 12 before it fully maxes out. I mean, that doesn't seem like some peak bubble valuation, and you really want to do a forward PE because look how much net income growth is happening just in 2 quarters. They're going to make 5 billion of after-tax net income next quarter, 6.5 billion the quarter after. The net income has never even been close to that before, so they're about to hit record numbers. But there is one thing to keep in mind about these. This is why I wouldn't permanently buy and hold the stock forever. This is a nice short-term, medium-term play because 2028, 2029 is potentially going to be peak ever net income numbers for these memory companies because they can't sell this commodity at a 60% net margin forever. So that kind of suppresses the long-term value. But Morningstar says SanDisk is fairly valued. While the AI-driven memory pricing upcycle will drive tremendous near-term revenue and margin growth, you got to watch out for the extreme long-term market cyclicality and a lack of pricing power to require caution. But yeah, they say this is $1,000 fair value stock. So yeah, again, hard to be bearish at a 6.8 forward PE. It's your memory play. Just like Micron. I'm actually a big fan of Micron as well. I believe, yeah, they're up 18% on the day. Samsung reports record profit, warns AI memory supply shortage should persist all the way through 2028. Alphabet just rose their capex to $205 billion, which boosts memory demand outlook. And we're actually about to get Amazon earnings literally in a couple minutes. So I'm super excited. I do own Amazon stock. Looks like they're already up. No way. We'll have to check out their earnings. I think they're already out. Amazon's up 5% after hours. I can't believe this. Amazon has been one. See all those buy orders right there? Every time they're on a dip, I always buy more Amazon because this is one of the best buy and never sell companies. They just took over Walmart as the #1 company in the entire world, Fortune 100 company. There's no other company that exists. Yeah, Amazon tops Fortune Global 500 because they do the most amount of revenue, over 720 billion of annual revenue, just past Walmart. So, they're literally an ETF in one, a big cloud play. They're an Oracle, a Walmart, a UPS, Instacart, SpaceX, the Trade Desk, all in one, with their Whole Foods. They own Twitch, which is a streaming service. A lot of people know Amazon for their overnight shipping you a package, same day, but they don't keep too high of a net margin on that. But the AWS is their most valuable business. It does over 130 billion of annual revenue, and it has over 30% plus net margins. It's the most valuable part of Amazon. So let's see if we can get what the earnings are. They literally just came out. Free cash flow to decrease. We'll have to wait a couple minutes, but I'm assuming the earnings were good. Amazon is up 7% now after hours. We kind of saw this coming because of Microsoft today. Microsoft was up 15%. They're the second largest cloud company. I bet Amazon had some great cloud numbers, but Microsoft is the world's second biggest cloud company with great earnings. I'm like, that most likely going to bode well for Amazon. So the other company that reports earnings in less than 2 minutes is Reddit right here. A lot of people think Reddit is a meme company. We'll come back to Amazon right here. No way, they're up 8.4% on the day now. Congrats if you own Amazon. I've been shilling Amazon forever, a phenomenal never sell stock. But here's another one that has just impressive financials. A lot of people hear Reddit, they think of some meme company, but this company is no meme. This is a phenomenal growth stock. So they're actually known as like one of the last real places on the internet. Their ARPU, average revenue per user, actually just did a whole video on Reddit a couple of days ago. They make over $8 of ARPU, average revenue per user in the US. But look at these revenue growth rates. The other part of their business is licensing out their proprietary data to LLMs. So LLMs like Google Gemini is training their LLMs on Reddit's data. It costs nothing to run Reddit. I mean, they legit got 91% gross margins, and check out the revenue growth. Revenue's up 60 or 70% every quarter. So revenue's up 69, after grew 61, after grew 53. I mean, they're just on a phenomenal streak of growth. And if we just zoom out, that's what you want to see if you're going to diamond hand a growth stock. And it's not just the revenue, it's the net income as well. This is actually pricing power. The net income for the past 5 quarters in a row is up triple digits, up 670% year over year. Another thing that takes a lot of risk off the table is the fact that Reddit literally has zero debt. Reddit is completely debt-free, doesn't owe anyone any money. And so, yeah, now they have over 30% plus net margins. They're printing free cash flow, also up triple digits, and they have literally no debt. They keep beating on expectations. So check this out. The orange line is what the analysts expect. The blue line is what they actually report. They consistently beat by a huge chunk on every metric. And Reddit isn't even crazy expensive at a 30 forward PE. I actually believe it's even lower than that because if they're beating on net income like this, I believe they're going to continue to do that. And I think their earnings might be out. I don't know, but they're up 1.8% after hours. That's one of my favorite kind of software growth stocks. Yeah, there's Amazon up 7% right now. Let's see if we can get the news tab right here. So post EPS of $5.75 versus a $1.82 estimate. There must have been some one-time adjustment there. I believe they probably had a realized gain on Anthropic, if I had to guess. But So yeah, $5.75 of EPS. That is definitely reported quarterly sales of 200 billion. So what was the estimate? So the estimate was 196 billion. They did 200 billion of revenue just this quarter. But we'll come back to them as the market really digests all the earnings. Hey, what's up, everyone? Oh, what's up? MC says Q3 guidance revenue of 200 billion, operating income 24 versus 25 billion estimate. Hey. Amazon's numbers was great. Hey, what's up, MC? Yeah, one thing we're watching is their CapEx numbers, see what that does to free cash flow, because Amazon's free cash flow has been a little suppressed. Look at this right here. They are spending a lot more than they're making. They used to make good free cash flow every quarter, but now if we go to their CapEx, this is crazy right here. They spent 65 bill this quarter, 47 billion last quarter, which, is more than they made in net income, so that's why the free cash flow goes negative, because they're spending more than they're making. But if it was any other company besides Amazon, I wouldn't be worried. I'm not worried about Amazon, because I would be worried if it was any other company besides Amazon. They have the best cloud business, $600 billion backlog. They do TPUs. Amazon's file application to deploy 5,100 Amazon Leo satellite constellation. Wow. Amazon signs $410 million cloud agreement. All right. Anyway, Amazon's great. I'm glad I own them. Hey, what's up, Looney Zone? Shout out the member. Yeah, should we look at Microsoft earnings? I haven't even really deep dive into them. Oh, yeah, someone said Robinhood. Yeah, let's do Robinhood first. This is one of my favorite brokerages. Then we'll come back to Amazon and some of these other stocks. But Robinhood, I do own this stock. It's actually been one of my biggest regrets. I've been selling Robinhood. I'm up like 600%, but I sold most of my shares at like 100% gain. But in our Cavco just reported earnings. You know what? That just crashed my Robinhood app right there. Well, actually, another stock I own reported earnings. Probably no one ever heard of this one, Cavco, right here. They're a factory-built housing company. But anyway, I do use Robinhood, and here's why I'm so bullish on Robinhood stock. They just introduced prediction markets into the app, and I'll be quick about this, but if you didn't know, whenever you buy and sell a stock on a brokerage, they only keep a 0.1% fee, but whenever you do these prediction markets, which I don't recommend doing because it's pure speculation, your risk reward is better in stocks than on prediction markets, but they keep a 2% fee. It's literally 20x more valuable for their bottom line when you do a prediction market over a stock trade. And that's why every single brokerage is getting into prediction markets. Moomoo, Webull now does it. Coinbase is getting into prediction markets. Polymarket and Klarna, there are Kalshi, they are money printers. So yeah, Robinhood earnings, let's see what they were. So they beat on revenue, beat on net income, beat on EPS, and on EBIT. So it really was a good triple beat quarter. Yeah, check out these net margins Robinhood has. They had a slight one-time adjustment last quarter, but literally they collect royalties pretty much. Every time you do an option or a crypto trade or a prediction market, they just keep a high margin fee. So Robinhood has over 40% plus net margins. So for every $100 that comes in, they keep $40 after tax. So yeah, let's see if there's any news here. Robinhood chain records strong growth in tokenized assets. Robinhood in talks with Crypto.com to expand prediction market. Robinhood Market reports record earnings. Gold subscription rose 39% to 4.8 million, and total platform assets grew 32% to 369 billion. Over 100,000 users signed up for their new AI-powered agentic stuff. Anyway, Robinhood's pretty cool. The valuation is expensive, but they deserve to be expensive because they're a quality business, basically collecting royalties. The forward PE is at 36, so they trade at 36 times next year's net income. We do get some metrics here, like their one business that's struggling is crypto volumes. As we know, it's down like 40% year over year. We almost can say certainly it's because actual Bitcoin is down 50% from 1 year ago. I actually just read an article. The average Bitcoin buyer is now actually negative on their position. So yeah, look at them the past year. That's really unfortunate. Bitcoin was 122K. Now it's only 64K. Anyway, I've always been a believer if you buy Robinhood stock, it's your way to get exposure to crypto. And I believe Robinhood will outperform crypto. So anyway, let's go. Let's see what Reddit and Amazon's doing. So Amazon's up 5.5% on earnings. They just came out literally minutes ago. So yeah, Amazon climbs as AWS revenue surpasses estimates. That's exactly what Microsoft did. They had an incredible beat. Looks like they had some one-time adjustment. We'll dig into that later. I'm going to bet took a gain, a realized gain on Anthropic or something. But anyway, we'll check that out in a little bit. And then let's go back to Reddit. Reddit's another stock that I own. Looks like they're down only 0 point or 1% right now. So look at this. Average revenue per unique user is $6.18. So if you're on Reddit, you make them $6.18 a year. Daily active uniques are 130 mil. Wow, $1.25 of EPS. What was the estimate? That was a big beat on EPS, just like I thought they would. Huh. I'm surprised they're not up after hours. We'll maybe have to deep dive into that a little later. But first glance, I'm really happy with Reddit's earnings, and I'll show you my position in Reddit. Then we'll dig into all the stocks you guys have in the chat here. Like I saw Microsoft. I haven't looked at Microsoft's earnings yet, but yeah, they're up 15% on the day. I've been promoting Microsoft stock like crazy. I love that company. But yeah, I do own. Where's Reddit? Did they just go down? Or, yeah, Reddit. I got. Oh my goodness, they keep moving, so I can't click on them. Okay, I got 8 or 5 shares of Reddit right here. Actually, during this big software dip right here, that's where I was buying more Reddit. There's my little buy. That's that B order. I bought more Reddit during the dip. So yeah, they're great. A great software growth company with surprisingly good financials. So what's up, Looney Zone? Shout out the member. He says Microsoft. Let's do it. Hey, thanks, MC. Bet he's got the data for us. EPS $1.25 beat the 96 estimate. Beat revenue beat by 30. Dang, nice. Yeah, I love Reddit too. Great buy, never sell stock. What's up, Millers? So here's Microsoft right here. Let's see if there's any news. Yeah, Azure Cloud surges 43%. Their Azure Cloud does now over 100 billion of annual revenue, just the Azure Cloud specifically. Is there any other news right there? Copilot reaches 30 million paid seats. Microsoft and Databricks. Okay, Microsoft replaces OpenAI technology with proprietary models in PowerPoint and Bing to cut costs by 85%. Dang. Anyway, check this out right here. This is why Microsoft is still going to climb higher. Microsoft literally only trades at a 23 forward PE or 23 times next year's net income, even after this 15% rally. That is still cheaper than the S&P 500. This is not some peak bubble valuation, a 23 forward PE, in my opinion. Morningstar even says they're still undervalued. It's a $600 stock as a fair value. So Microsoft's undervalued, massive structural advantages in its hybrid cloud, rapid monetization of AI through Azure, and a dominant monopoly in enterprise productivity software will drive long-term value growth. Yeah, their Office products, this is the world's #1 software company, the world's #2 cloud company, and a great AI play. Did you know they own Anthropic and they own 28% of OpenAI? I don't know what percent of Anthropic they own, but they do own a good chunk of Anthropic. They own 28% of OpenAI. So if these AI businesses really, the reason Microsoft is being suppressed right now, why their chart before today looked like every other software company. And I'm like, Microsoft is not your average software company. This one should trade at a premium. They're the most well hedged as a huge owner of OpenAI and Anthropic. And if those businesses really start to take over, their Azure cloud business will continue to boom. And you get exposure to Minecraft, Xbox, Activision, Blizzard, LinkedIn, Windows. I mean, they own so many great businesses. So this is, in my opinion, a phenomenal never sell stock. And I've been talking a lot about them recently. Yeah, Reddit's down 5% right now. Yeah, Microsoft did a nice 14% day. Not too shabby. All right, let's see what else is. We had some other. You know what? Let me type in the earnings hub. I don't think there were any other significant companies reporting earnings, but we'll check right here. Let me know if anyone wants me to cover this one or any of these. PGY stock. Oh, they already reported earnings. PWR. Oh, that was pre-market as well. They're up 17%. ICE, the Intercontinental Exchange, they took a 10% investment in Polymarket. Oh, Solstice right here. That one will be interesting to watch. First Solar, that's my favorite solar company that exists. Rolls-Royce reported earnings this morning. They had a nice little beat. Anyway, I'm not seeing any others like big companies here that we need to watch. Oh yeah, Cavco is the other company that I own. Dang, they're down 5% after hours. That's not good. Oh well. All right, let's see. What is next in the chat here? So, time to go to sleep. Good night. Oh, yo, MC, have a great night, dude. Good to see you. Are they in big profit in Anthropic like Google did a 50S on SpaceX? Well, hey, I'm actually not sure what stock you're talking about, but Microsoft and Amazon both own Anthropic. Actually, Amazon owns 20% of Anthropic, and Amazon's up 7.5% after hours. So they must have had they definitely had good earnings. It looks like they had a big beat on their cloud business. Is there any comments kind of explaining it? Stronger than expected Q2 earnings. Yeah, AWS business carrying. Yeah, their cloud business is great. So Japan says wait, what is this stock? KRYS? Huh. Crystal Biotech. Hey, this one's on my watch list, so there must have been something that impressed me. Geez, they're at a crazy all-time high right now. So congrats if you've ever bought this stock. They report earnings in like 5 days. But let's see what they do. So revenue, I can see why this stock is at an all-time high. Their revenue's at a record, 116 mil of revenue. And on this 116 mil of revenue, they kept 55 million in net income. So yeah, they also basically collect royalties. Literally 48% net margin, 48, 80, 40. So for every $100 that comes in, they're keeping like $48 after paying taxes. The free cash flow is even better. And another way you can tell if this is real, you look at the operating profit. This is the before tax, before interest. Net income was slightly higher. So they might have had a slight one-time adjustment. So this is before tax and before interest. The thing is, I now know why the net income is higher than the operating profit. It's because of their interest. So they have $823 million of cash. That makes them, 7.7 million of interest. Most companies have to pay negative interest, but they're collecting interest, which is not included in operating profit, but it is in net income. So that's why the net income is higher than the before tax, before interest number, because they're collecting so much interest. Anyway, phenomenal stock. I'm going to re-add them to my watch list. Collecting royalties, one of the best biotech stocks that exist. If you're going to buy a biotech stock, in my opinion, buy one with quality fundamentals like that. Oh, wow, dang, we're up 4K on the day. Someone said Roblox reported earnings. I've been really bearish on Roblox. Dang, and they're down 11.5%. I'll give you a quick glance on why I've always said Roblox is one you want to stay away from. If we just go to net income right here, they are just so far away from profitability. For all of time since their IPO, all they do is lose over 200 plus million of net income a quarter, like 200 to 300 million in net income. Roblox is very leveraged. I mean, pretty much the same liabilities as assets. And how are you going to pay off this debt when you're actively adding to the debt pile when you lose 2 to 300 mil a quarter? So that's why I've always been scared about Roblox. I've not recommended that one. If you want a video game company, check out Microsoft. They own Minecraft, Activision, Blizzard, some other good Xbox. Every time you buy something on the Xbox store, they keep a little fee. Brandon said PGY, they just reported earnings. So yeah, they're up at 9% of the day. This is a software company. I wonder what are their earnings or narrows 2026 revenue outlook. So their adjusted EPS beat on earnings. So have they loaded in? Yeah, they loaded in. So check this out. Analysts expected 350. They did 380. No wonder they're up 9%. They beat on revenue, net income, EPS, and EBIT. So it wasn't like some accounting fluke that propped up the net income. Even on the earnings before interest taxes, they beat by an insane chunk. So yeah, this one's actually quite fascinating. You're buying this software company basically as they're getting net income positive for the first time. These are the only 4 quarters they've ever been profitable, and they're continuing this profitability streak. They're supposed to make 40 mil next quarter, 41 mil the quarter after. So what I've liked about this one is they're so cheap. You only traded an 8.8 forward PE or 8.8 times next year's net income. One of the reasons I think they're so cheap is because maybe this business could get hurt by AI. Anyway, this is kind of a finance loan company where they help companies originate loans, which that industry is also hurt down by real estate a little bit. But anyway, they got US Bancorp, SoFi as partners. They say approve more loans and retain more customers with Pagaya Network, all with no additional credit risk. Interesting there. 8 times net income seems cheap to me. Let's check on Reddit again. Yeah, this is another stock, yo. And dang, Reddit's down 7% after hours right now. I'll actually be looking to buy the dip. Reddit stock falls after stellar earnings reports. So, yeah, EPS beat by a huge chunk. Revenue beat by a huge chunk. So maybe they gave some bad guidance. Reddit's average revenue per user, global average revenue per user, which is even better metric than their US, is $6.18. So if you use Reddit, you make them $6.18 a year, no matter the country you're in. Isn't that ridiculous? Bro, there's so many scam accounts of you. I had 2 text me. Yes, please watch out for people impersonating me. I'll never follow you. I'll never DM you. Not in a mean way, but you know what I mean. I literally sell nothing. I have no course book. I don't coach. I literally do nothing at all. The only way to learn is to watch the streams for free. I literally sell nothing. So yeah, please watch out for people impersonating me. I'll never follow you or DM you. And I sell nothing. So, did you see Amazon earnings? Yes, sir. I'm a big shareholder of Amazon. They're up 8.8% after hours. Holy schmoly. They had a great beat on their cloud business. So, their Azure cloud, that's the thing. Amazon's the most valuable. Their most valuable business is their cloud business. So, Amazon's free cash flow turns negative due to their AI investments. Despite that, the stock's up 8.8%. And I'm okay with that. And the market, I bet, is okay with that because their cloud business is so growthy and they have the backlog to justify this spend. So, and they're selling TPUs. Theirs is an ETF in one. I mean, they're a satellite play, a grocery store play with Whole Foods, an advertising play with Twitch and Amazon retail, a subscription model play with Amazon Prime, cloud play, logistics play, a UPS, and Instacart all in one. I mean, can't go wrong with that company. Such a great stock. All right. So, Nathan, you have to look into Reddit earnings are amazing. Yeah, I definitely will deep dive into them later. Unfortunately, they just haven't loaded in yet down here because the earnings came out 10 minutes ago. But whenever they load down here, we'll definitely do a more deeper dive into Reddit's earnings tomorrow. But looking at the headlines, I'm actually surprised. I'm shocked that Reddit is down 9% right now. I do own Reddit stock as well. Here's what's up on the day. Yeah, AMD and Microsoft went crazy today, but Reddit is down 11% after hours. I'm still up 50% on them, but I'm actually looking to buy more, especially like if there really is no reason for them to fall, I mean, I'll happily buy more. There's no fundamental reason for them to be falling, so. All right, thoughts on DocuSign? Yeah, so DocuSign is one of the ones I'm a little worried about. I did used to own this stock actually. Dang, they're down 6.6% of the day. They're just now getting net income positive, which is great. So check this out, well, actually, they've been profitable for like 2, 3 years now, which is great. They're making like 80 million in net income a quarter. But this is that digital signing company where you signed a document using DocuSign digitally. I just don't know the long-term moat behind this company. Like Microsoft just created their own thing where you don't have to use DocuSign. You just use Microsoft's digital sign. And I know Adobe now has a very similar thing, but Morningstar says they're undervalued. Strong adoption of its AI management platform and robust enterprise customer momentum will drive long-term value growth. I know they have a great subscription model company. The revenue kind of grows like mid to high single digits, like 8, 7, 8%. So the revenue growth has started to slow down a little bit, but you know, I don't know. I wouldn't be worried. I believe they have no net debt, or the last time I checked, they have 800 mil of cash and no long-term debt at all. So yeah, I believe, yeah, literally no current or long-term debt. I know they do a lot of share buybacks too. Let me see if I can find that. Yeah, check that out. Dang, they did 300 mil of buybacks, 250. They're doing like a couple hundred mil of buybacks a quarter. Here's what that does for you as a shareholder. The net income grew by 8.4, but the net income per share grew by 17. How did the net income per share grow way faster than the net income? Well, it's the per share part of the ratio, the denominator. Pretty cool. I did not know they did that much buyback. So is Apple earnings today? Apple's on July 30th, and today's the 30th. Wait, Apple. Oh yeah, Apple is 8 minutes away. So we get Apple earnings in 8 minutes. I would not buy Apple before earnings. I do think the stock is really expensive. Like historically, they're expensive at 37 times next year's net income. But Apple's a fascinating company. A lot of people are locked in the Apple ecosystem. You buy the iPhone, they sell you the hardware, but then Apple's most valuable business is their services. Whenever you go buy something in the App Store, like a video game or Clash of Clans gems, you spend $10, they keep $3 of that. They keep a 30% fee on every transaction in the App Store, and it's 100% margin, literally basically collecting royalties every time someone buys something in the App Store. So yeah, they're actually releasing their foldable smartphone later this year. Let's see if there's any news here. Apple launches Apple Upgrade Device Leasing Program in partnership with Klarna. Did anyone hear about that news? But yeah, Apple projected to capture 25% of the foldable smartphone market share in first year, and their price is going to be 2,500 schmeckles for the new phone. But yeah, in 7 minutes, we get Apple earnings. So remind me to come back to this one. I'd love to see what they have to do. They're actually now the largest company by market cap. I believe they just took over NVIDIA. Let me actually check right here. We can check live. Yeah, Apple's worth in the top right, 4.9 trillion. NVIDIA's worth 4.7 trillion, Google 4, Microsoft 3.3, and Amazon's up 8.8% after hours. A nice little pop on some great cloud earnings. So yeah, they had a little one-time adjustment. It says their EPS of 575 beat by $3.92. We believe that's because they had a gain from an Anthropic investment. We'll check that out a little later. But yeah, 6 minutes away till Apple earnings. They always report at 4:30, 30 minutes after the close. So what would you say about Palantir? Yeah, Palantir, I promise this stock will impress you. What's this app? Hey, I'm actually on a brokerage. It's like Charles Schwab E-Trade. If you want to get the brokerage I'm on, it's linked in bio there. Or you can type it into Google, brokerage called Moomoo. But yeah, linked in bio if you want to use my link there. So here's Palantir stock, another company that practically collects royalties. Half the revenue comes from the government. Every police station pretty much uses them. The Pentagon, the military, the Air Force all use Palantir. And that government business grew 76% year over year. If we zoom out, that is the fastest growth rate on the entire screen. Like the growth rate is reaccelerating. And not just the government side, but also the commercial side with S&P 500 companies. This is generally one of the most impressive stocks I've ever analyzed. The commercial revenue grew 95% year over year, also the highest growth rate on the entire screen. Another thing that takes a lot of risk off the table is their monster balance sheet. Palantir literally has no debt and $8 billion of cash. Their cash pile just grows every quarter because they don't owe anyone any money, and they make like 800 million net income a quarter now. Check out these triple-digit net income growth rates. Like their net income was 217 million same time last year. Now it's 880 million. And what's it going to be the same time next year? And look, check out their net margins. This is pricing power. Net margin is now a 53. So for every $100 that comes in, they keep $53 after tax. They've been crushing the analyst expectations. Analysts expected 616 million net income. They did 870. So I'm a huge fan of Palantir. I will be an owner of this one day. I actually was an owner. One of my biggest regrets literally ever has been selling out of Palantir. But yeah, they traded 137 times net income. That's not how you value them. You want to do a forward PE. They only traded at 80 forward PE. Look at well, that's still expensive, but look at how it gets cut in half. It gets cut in half because the net income is literally growing triple digits in just 2 quarters. So yeah, look, net income's growing from 475 to 865. And that's assuming they don't beat on earnings. They're still triple digit net income growth. That's why you almost want to, you got to do a PEG ratio, price to earnings growth. So yeah, any other news on Palantir? Anyway. Yeah, Apple earnings in 4 minutes. Which app do you use? Yeah, hey, again, I'm on a brokerage right here. If you want to get this brokerage or app I'm on, it's linked in bio there, brokerage called Moomoo. But yeah, affiliate link in bio. Ooh, THC. This is Tenet Healthcare. I love this stock. Same with HCA Healthcare. This is like one of the largest non-governmental hospital groups and ambulatory care companies. So yeah, their ambulatory care business is growing pretty nicely. You know, it's kind of seen as recession-proof. Even in a recession, you break your arm, you still got to go to the hospital. So anyway, they had a phenomenal beat on earnings. Like that's why they had such a massive gap up. You know, stocks don't gap up for no reason. There's got to be some fundamental increase. Especially for the rally to be sustained. Sometimes you'll get some junk stock that'll rally and then it'll fall very quickly. But this one's not going to fall because they really had a substantial beat. Huge beat on revenue and an insane beat on net income. They expected 511, they did 826. And that wasn't like some one-time adjustment either. That was a real gap beat. Even on EBIT, massive beat. So, and even at all-time highs, they only had a 10.2 forward PE. They only trade at 10 times next year's net income, even at an all-time high. That sounds like to me they're going to continue to climb and hit newer and newer all-time highs. So just to recap, yeah, dang, Amazon's up 8.3% after phenomenal cloud numbers. Our Reddit stock, how are they doing? Staying. So Reddit's down 7% despite the best quarterly earnings in their history and huge beat on earnings. And how's our other company doing? I own a stock called Cavco. They just reported earnings. Looks like the stock isn't moving after hours because they have like no volume. No one pays attention to that stock. All right. Well, actually, let me see if it's loaded over here. Cavco. And then Apple earnings in less than 2 minutes. Slight miss on estimates there. Anyway, so AAPL stock. So yeah, they're literally 2 minutes away from Apple earnings. We're super excited to see that. Someone said he put an order in on Reddit. Hey, nice there. That one I wouldn't buy meaningfully yet, but it honestly seems like a nice time to maybe nibble a little bit on Reddit. GRMN. Yeah, hey, Looney, let's check out Garmin, and then when we're done with this stock, we'll go check out what Apple's doing, because by the time we're done, Apple numbers will be out. Garmin stock is at a crazy all-time high. Yeah, look at that. They had a big gap up, and it was on earnings day specifically, so let's go see what their earnings were. They do fitness, outdoor, marine, and aviation stuff. Wow, yeah, look at this big beat. Analysts expected 447 million net income. They did 541, and that was a real beat even on EBIT. That's super impressive. So no wonder they gapped up so dramatically. Yeah, net margins expanded 21% to a 26% net margin. Yeah, they're literally making like 500 mil in net income every quarter, and it just continues to grow. Yeah, like look at these growth rates the past 5 quarters in a row. So anyway, the stock, even at an all-time high level, Garmin only has a 29 forward PE, which honestly is fair. I mean, slightly above the S&P 500, but anyway, some sort of a, they're actually headquartered in Switzerland. So this is a Switzerland stock. They do GPS technology, marine, outdoor, auto, OEM. Maybe we can go to their website right here. Garmin, huh? Huh, so yeah, literally fitness products. Maybe they sell like smartwatches. I just bought the new Google Fitbit. It's called like the Whoop Killer, if anyone's heard of Whoop before. Huh, interesting there. Maybe, yeah, dang, they sell like laser rangefinders. They even do stuff for like helicopters or airplanes, flight displays. So it's not just selling watches. Their technology is used, I guess, in like cockpits or anyway. How much does their watch cost? Dang, 550 bucks. Wonder how that compares to the Apple Watch. Anyway, some sort of Switzerland company. Let's see where the revenue comes from. Last thing, then we'll go to Apple. So yeah, it looks like America is most of the revenue. Then the other half is EMEA and Asia Pacific. So AAPL stock. Ooh, and then we could look at Eli Lilly too. Apple numbers literally just came out as we're speaking, literally 10 seconds ago. We'll have to check the. Sometimes it takes a minute, but oh, it's already out. So revenue of 29 billion, or oh, that's the European revenue. Okay, we gotta wait. Okay, Apple Max. Okay, I'm trying to find like the consolidated like everything number. Okay. So hmm. EPS included favorable impact from tariff returns. Huh, nice little 2%. Yeah, the IEEPA tariff refunds have really benefited a lot of companies' earnings, like Amphenol as well. So we'll check back on this in a minute here. Looks like they are initially down on earnings. I'm not surprised. Even if they had some good earnings, I bet it's kind of priced in, trading at a 37 forward PE. Did you know, though, the most impressive part about Apple is their share buyback program? No other company in the world buys back more stock than them. They have a $100 billion a year share buyback program, where literally, if we just zoom out, every quarter, all the way back to 2023, 2020, they just buy back over 20 billion of their stock every single quarter. Apple is one of the most shareholder-friendly companies ever. They buy back like 20 billion of their stock every quarter. They do a dividend of $3.8 billion. They can easily raise this. They could afford to double, triple their dividend, but they choose not to. And notice the cost of the dividend went from 3.92 to 3.82. How'd the cost of the dividend go down? Because they didn't cut their dividend? Well, it's the share buybacks. It super helps out the company. And another way you can tell, net income grew by 19, net income per share is up 22%. So it's because of the share part of the ratio. So yeah, we'll come back to Apple in a minute. It looks like they're down 2.7% after hours. Huh. Any other so their EPS of $2.02 beat the $1.89 estimate. Sales of $109 billion beat that $108 billion estimate. So they didn't beat too crazy, like they beat by $1 billion on revenue, but it looks like the EPS had a nice little 10-15% beat there. But the stock is still falling, maybe because they're at a premium valuation. Amazon right here. Amazon's still up 8.5%. Okay. Let's look at what should we look at? MasterCard. Did MasterCard report earnings? I did not know that. Let's see right here. MasterCard is actually one of my favorite companies. They practically just collect royalties, just like Visa. Every time you swipe your card, they just pretty much collect a high margin fee. Yeah, but look at Eli Lilly after this. And MasterCard and Visa usually move, it's not exact, but they rhyme together. Yeah, it pretty much is exact if we can line it up. MasterCard and Visa are two very cool companies. And check this out. If we go to net margin, MasterCard has a 47% net margin, 45 to 47%. Every time $100 that comes in, they keep $47 after tax. It's ridiculous. Like revenue was 9.2 bill. After tax, they kept 4.38 billion. And after everything, after expenses, after everything, GAAP net income was 4.3 billion. So they really do have like 50% plus net margins. Ridiculous. And only a 27 forward PE. That's a fair valuation, in my opinion, for the growth and quality that they are. Morningstar says they're undervalued. A nearly unaccessible global network effect and the ongoing secular shift toward electronic payments will provide a long runway for sustained value creation over there. Let's go back to Apple. Let's see how they're doing. Usually, as well, we get a lot of movement after the earnings call. So usually, the stock market will do its initial reaction. This is exactly what happened with Microsoft yesterday. The stock was only up like 1% after their earnings report, but then the CEO said something on the earnings call that sent the stock up 10%. So yeah, Microsoft is a great stock. Same, actually, we got to look at Meta. Hey, what's up, EBT and Donjar? Hope everyone's having a great day. Again, I apologize if I'm behind on the stocks here. I'm trying to get to everyone's. We're looking at earnings as well. But hey, if you're enjoying, please hit the like button and feel free to subscribe and hit the follow button. I try and stream every day, and I literally sell nothing. Some person earlier said 2 people followed him that has the same name and picture as me. I banned a couple people as well. I'll never follow you, DM you. I sell nothing. So here's Eli Lilly. This is the stock has done great. They're a great healthcare company, but they've recently done phenomenal because of their weight loss prescription. They have a weight loss injection and pill that's literally more effective than Ozempic and Wegovy. And on that day, Novo Nordisk, which owns Ozempic and Wegovy, fell 10%. Eli Lilly went up 10% because they have a more effective weight loss prescription. Novo Nordisk is actually filing a lawsuit and a preliminary injunction against Eli Lilly over alleged misleading GLP-1 prescription advertising. I don't know what that's about. Alleges comparative ads use outdated clinical trials, comparing its prescription's maximum dose against the lower doses of Novo Nordisk's and Ozempic's newer higher dose formulations. Oh, wow, look at that. So they're like, we're maybe our that you don't need to worry about that news if you're a shareholder. But anyway, Eli Lilly meets primary endpoint for 2 phase 3 obesity trials. FDA submission delayed to Q1 2027. Anyway, they own so many other great prescriptions as well. They're at a 33 forward PE, which might be a little too expensive, but they're a money printer. Check out this net income growth over time. If we zoom out, they are by far the most profitable they've ever been. I mean, they made $7.4 billion net income this quarter, and that's real. Before tax, they did $9.7 billion. After tax, they kept $7.4 billion. And so this was their most profitable quarter ever. So no wonder they're at an all-time high. It's because their fundamentals are genuinely the best they've ever been. And if we zoom out on the revenue right here, I feel like this needs to be rewarded. Check this out. Revenue's up 55% year over year. After grew 45, after grew 28. So they're just on a streak of growth. Great growth stock right here. But honestly, the value buying meaningfully today, I would not do. I'd wait for a lower price entry point. But yeah, dang, they were down 5% on the day. Anyway, the other weight loss company, which I honestly would not buy, is Novo Nordisk. That was the company suing them. This is the company that owns Ozempic and Wegovy. If you didn't know, their main secret sauce, Ozempic, just expired. Their patent expired earlier this year, a few months ago, in a lot of their main markets like India, Indonesia, Brazil, a ton of... there's so many more generic brand knockoffs that are hurting them right now. Let's see what's next year. Yeah, let's go back to Apple real quick. AAPL, just to see how they're doing. Only down to A. If that's the worst Apple does, only down 2.4%, no one should be worried about that. You know, if this is the worst they're going to do, 2.4%. So Apple reports Q3 earnings with revenue and margin guidance in focus. So, okay, yeah, rising memory costs potentially pressuring iPhone 17 margins by 4 to 9%. Dang. Any other news? So, all right, we'll come back to this a little later because we're still waiting for the news to get on the thing. So, started as GPS. Hey, what's up, Personal? Hey, is that a stock there? Let me know if you're talking about a stock ticker when you say GPS. I don't know if you are. Applied Digital, buy or run. So I am a little worried about APLD. Although they're up 20% on the day, but this is just a business model that I'm not too interested in. So if you're wondering what does APLD do, they own a bunch of GPUs and they rent them out. So that's kind of all the company is. They own a ton of NVIDIA GPUs, and then they rent out these GPUs to cloud companies, which is highly in demand right now, but just super competitive, not profitable business model. Like if we go to net income forecast, they're not great. They're going to lose 80 mil next quarter, 70 mil the quarter after. Dang, they lost $1 billion of free cash flow, 700 mil, 600 mil, 300 mil. Like it'd be a different story if this company was making net income, making free cash flow, but dang, they had a big miss on net income too. They expected 59 mil loss. They lost 111 mil, same last quarter. So that's the one thing that scares me. There is no, like, I can't even value this stock. There is no forward PE. There is no free cash flow yield. And those are the kind of companies I want to own. Ones that make net income, make free cash flow, and ones that have high barriers to entry. This one stock fell a bunch because Meta is now renting out their excess GPUs. And Morningstar says they're actually overvalued. The company's severe lack of profitability and rapidly deteriorating cash flow, coupled with an exceptionally high valuation premium, pose significant risk that warrant extreme caution. I agree. There is just, it's a tough sell. And at an $8 billion market cap, I'd rather own a Powell Industries, which is worth, dang, Powell is worth less than them. And this this is worth $7.6 billion. This company has literally no debt at all, a $2 billion plus backlog. They just had their highest ever order in history, $400 million mega data center order. And this one actually makes net income. They actually are great, 40, 50 mil plus in net income a quarter. The free cash flow is like 50 mil a quarter. That's a nice little alternative. It's also a big AI beneficiary. Instead of just owning NVIDIA, own the whole ecosystem. Own the companies doing the complex MEP work and the companies doing the HVAC work and the switchgear solutions and ones that provide copper cables like Amphenol. Amphenol, they just reported such good numbers. Even after this, at this all-time high level, they're only at a 25 forward PE. I actually, on another dip, I will be buying more. Like, I don't care. Even though I'm up 120% on this stock, I will buy more at a 24 forward PE because it's still undervalued. This is one of the best stocks I've ever seen. This is the company that provides the copper cable and fiber optics for NVIDIA, Google. So yeah, even Morningstar says they're still undervalued. Surging AI infrastructure demand, highly diversified mission-critical portfolio, and industry-leading cost control through its decentralized platform will drive long-term value growth. I think it's a better play than Corning. Micron was a wild ride. Yeah. Hey, what's up, Isaiah? Good to see you, man. Yeah. Apple, I think they're down 3.5% right now, which at the end of the day isn't too bad if that's the worst they're going to fall. Apple, they actually beat on net income and they barely beat on revenue. They beat by like just 1 billion. There's some more we'll have to deep dive into as the news kind of starts to hit the news tab. But anyway, they've been really expensive. So I'm not surprised. Like, they're at a 37 times next year's net income, which is still a little pricey. But yeah, what's up, Brock? That's kind of my honest thoughts on APLD. I didn't mean to be too bearish on them, but that's the only thing that scares me. AXTI reports today, or AXTI. Dang, holy schmoly, they're up 28% after hours. So congrats if you own this company. Hey, they needed that rally after the little downtrend that they've been on. What is this right here? They announced a indium phosphide supply agreement with Lumentum. Dude, that's another fiber optics company for that NVIDIA took an investment in. Anyway, so they do the raw substrates for semiconductor materials, semiconductor equipment. Like I'm forgetting the name of the stuff, but here's their presentation right here where we deep dive into them. Yeah, the indium phosphide, and they're also in, the gallium arsenide. So anyway, these precious metals are specifically used, power amplifiers and LED, and anyway, it's things that data centers, industries that a huge tailwind from data centers. Yeah, congrats, Mr. Gurdon. That was a crazy little rally there. Why didn't I sell my house and buy more Microsoft and Amazon? Hey, don't feel like you missed out. I mean, Microsoft, in my opinion, is still undervalued. But yeah, we have been shilling Microsoft and Amazon. Every time anyone ever asked me to look at them, I'm always saying these are two great stocks to buy. And Microsoft still is a decent purchase. They're only at a 23 forward PE. Amazon, I don't know about because it is up 7%. I don't know if I'd buy it after the 7% rally, but they had some great earnings right there. Amazon Q2 revenue, it's $200 billion. AWS grows 37%, the fastest in 18 quarters. So the growth rate is re-accelerating. It's picking up, but the free cash flow turns a little negative on the $66 billion CapEx. So yeah, so their net income was slightly boosted by Anthropic investments, which oh wow, AI and chip business each exceeded 25 billion annual run rates. Advertising grew 26%. They own Twitch. Free cash flow turned negative because of their huge thing, but they have a $600 billion cloud backlog. They're selling TPUs. Hey, Amazon Zoox, which is an autonomous driving, robotaxi company. I saw them when I was in Vegas. I saw ads, and I saw Zooxes everywhere. They have such cool looking cars. Amazon files to deploy 5,100 satellites. They're actually the world's #1 company by total revenue. No other company that exists does more annual revenue than them. They do like 750 billion of revenue a year, and they're actually going to be the first company to hit 1 trillion of annual revenue. Pretty fascinating. That's why I buy never sell Amazon, or that's why I own them inside my buy never sell portfolio right here. All right, I'm going to turn on my fan real quick. It is like hot in my room. Okay. So next up, let's look at some more stocks here. Innodata. Yeah, what's up, Narc? Yeah, Apple earnings. We'll come back to Apple earnings in about 5 minutes when the earnings, when the market digests it a little more. So someone says, what was the stock? Oh yeah, Innodata. Someone says he's been thinking about buying more shares. Or thoughts on Innodata, thinking about selling out of them? I would not actually sell out of Innodata, especially I wouldn't sell them until August 6th, until they report earnings. This is one of my favorite software stocks, and I'm probably never going to sell out of this company unless they did some terrible numbers, but I believe they're going to continue this winning streak. Analysts expected 76. They did 90 mil. And literally, this company has no net debt. Like, out of all the this is still a really small company. In the top right, they're only worth 1.9 billion. Out of all the companies worth 1.9 billion, I want to own the one that makes a ton of net income every quarter, record free cash flow, record margin, and just had this monstrous beat on earnings. Analysts expected 2.82 million. They did 14 million. And I bet you're like, is that some accounting fluke, some one-time adjustment? It's literally not. Even on EBIT, it was this massive beat. So even on revenue, it was a quadruple beat by a huge margin. And they kind of like fully unpriced in a lot of that rally, which I might actually go buy a little more shares before earnings. I do own this one in my Roth IRA, or here I'll show you my position. Unfortunately, it's still a small position. This is what I recommend you own as a small position. You don't want to have a crazy amount of money in Innodata, but Meta, Google, Amazon, Nvidia, and Microsoft are all customers. Palantir is now a customer that agreed to spend 50 plus million a year on them. They're a great LLM training. They're a data labeling company. So Isaiah said, thoughts on TMO Thermo Fisher? This is like a diagnostic testing company. I've kind of been unimpressed with the revenue growth, but it looks like the stock is starting to pick up again, which is great news. They're still kind of the same price as they were back in 2021. So the stock has been flat for 5 years, or it's lower than it was 5 years ago. But let's see if there's any news. So revenue rises 10%. That's good. I don't remember them having double-digit revenue growth. So new launches including Orbitrap platform and Thermocycler. Anyway, let's go see right here. The analytical instrument segment launched new AI-driven mass spectrometry platforms. Bioprocessing business expanded with new design center. Anyway, this is interesting. They're only at a 28 forward PE, or 28 times next year's net income. Morningstar says it's fairly valued. An unmatched one-stop shop portfolio and deep entrenched within the biopharma channel will drive long-term value growth. So laboratory products, pharma services, life science solutions, analytical instruments. So when we combine all the businesses together, it's good to see, 10% revenue growth. They needed that because, this is why the stock is the same as it was in 2021. The revenue really hasn't grown much since 2021, but it's good to see that they hit a 10% growth quarter, because normally they grow like kind of mid to low single digits, but they print net income every single quarter. But look at this. This is why there's the same price that they were 5 years ago, because they can't escape this valuation. Why would they be worth more if the net income is, the net income was technically higher in 2020, 2021, so they can't escape this market cap level. But they're finally bringing the growth back. I don't know about this one. I know they have a nice, look at that. They do pay a dividend, only a 9% payout ratio. Not too shabby. A $200 billion healthcare company. Interesting. I definitely got to do more research on that one, but looks like the growth is finally back. I have 100 shares of Amazon. I hope to buy more eventually. Hey, you got a lot more than me. I wish I owned more before today. Every time I see Amazon on dip, I always buy more shares. Those are all those little buy orders right there. So Amazon's great. ETF in one, and I'm super happy with their earnings. Fan is not enough. Get an HVAC. You were invested in it. Hey, hey, what's up, Narc? Yeah, I love HVAC, the industry. We just had like a record U.S. heat wave. I don't know about y'all. You got to have an HVAC, whether the earth is getting hotter or colder. Because there's global warming. Then they changed it to climate change or as because they found that we're seeing more extreme temperatures in both directions. Like the winters are getting colder, the summers are getting hotter at the same time. So it's not just the earth is getting hotter. But anyway, whether it gets super cold or super hot, you got to have an HVAC, heating, ventilation, air conditioning. And my favorite company is Comfort Systems, FIX. Oh, did anyone see? Literally, I made a video yesterday saying buy Comfort Systems. I literally did a whole entire YouTube video. I said buy Comfort Systems and buy MCore. Literally the day after, Comfort System goes up 11, MCore is up 19%. So I can't believe it. Hey, yeah, if you want to support, yeah, watch out for people in person. I mean, the only way to support me, the literal only way to, it'd mean more than a donation, is to just check out my YouTube channel. I'm trying to build up my YouTube channel. I literally sell nothing. I have no course book. I don't coach or teach or anything. Only way to support me is check out the YouTube. Hey, what's up, Rick? Hey, our community just teared up. Hey, good to see you, man. Thanks for the little gift there. I appreciate that. And Isaiah, too. Thanks for all those donuts and gifts there. I appreciate that. Someone said USAR. This is USA Rare Earth. This is one of the companies that the government might have taken a stake into. I don't remember. USA and Infra acquire a 13% stake in French rare earth processor. USA Rare Earth to acquire SVRE Holdings for $2.8 billion, creating integrated mine-to-magnet platform outside China. So yeah, the US is trying to be more rare earth mineral independent. I still think this one might be a revenue-less startup, but this acquisition makes me excited. Yeah, so look at this. They basically just got their first ever sort of revenue. You know, these are the only quarters of revenue history we have because these are the only companies that have ever made revenue. They did 5.7 million this quarter. I bet you if they're buying a company for, 2.8 billion, that's gotta do something to their revenue growth. Huh. So representing 15% of current global heavy rare earth output. Wait. So targeting annual production of 800 tons, which is 15% of global heavy. I don't know. That could be something to look into. Interesting acquisition there. I would still be very cautious on this one. Like we can see the revenue is going to grow to 13 million, but it looks like they're going to lose 35 mil, 38 mil the quarter after. So they've actually been missing on net income numbers by a big margin the past couple quarters. So it's one, you got to understand that they're not going to make any net income or free cash flow for a long time, but it couldn't hurt to maybe put a little bit amount of money into this one. I don't know. Some sort of rare earth magnet company, something like that. That MLI stock is doing good, bought because of you. Yo, dude, I freaking love Moeller Industries. It's that copper HVAC data center company. Literally, they created the whole copper piping industry. I love this stock right here. They say, and another cool thing, they literally have, this has the DNA of a stock I want to own. Literally no debt at all, 14 forward PE, pays a dividend with a very low payout ratio, does share buybacks, 15 forward PE. Anyway, very cool stock here. Revenue's up 25%. And anyway, literally no debt at all, fortress balance sheet. That's Moeller Industries. Actually, a bit ago, I just did a whole entire YouTube video dedicated to that one. That's how impressive it was to me. And since that video, the stock's up like 15%. I'm only up 6%. I made the video around them around this like $55 level. I saw FIX and EME. Yeah, dude, the HVAC AI stocks are going redonkulous today. So what's up, Michael Anthony? He says SMPL drop on the Fed. SMPL. The Simply Good Foods Company. Oh, someone said Meta. We haven't not looked at Meta yet. Then we got to look at Lenovo and AMD. I'm so behind. I apologize here. I'm seeing SKHY. That's SK Hynix, the memory stock. So here's the Simply Good Foods Company. I believe this is like some protein stock, or I don't remember. All the food stuff. Oh yeah, if you've heard of Quest right here, like every time I go to the gym, they have like these Quest like cookies, like high protein cookies you can buy, and I bought them one time. But yeah, if analysts are correct, they only trade at 7 times forward PE or 7 times next year's net income. But that's if analysts are correct, because they haven't been for the past 3 quarters in a row. They have missed it pretty heavily on net income the past 3 quarters in a row. But the revenue had a big beat this quarter, but revenue weirdly is forecasted to decline. It's going from 340 to 313. So maybe that's why the stock is at an all-time low now, the big misses on net income. And yeah, if we go to, where's revenue right here? The revenue, the lifeblood, the sales of the company, it's down 6.3% year over year. But it's not just this company problem. It's like every single food stock that exists. If you look at General Mills, they are down bad. If you look at Campbell Soup, Mondelez, even, did you know Wendy's, the QSR restaurants, this is so sad. You're basically eating at a charity. Wendy's is lower than their 1997 IPO. So you bought Wendy's in 1997, you're down 40% on your money. That's why, and it's not just them as well. Jack in the Box is lower than their 1990, they're lower than their 2001 price. Red Robin is basically bankrupt. Let me see if I can find Red Robin stock. Red Robin. It's like Robin. Oh yeah, RRGB here. Dang, Red Robin is lower than their 2002 IPO price. Cracker Barrel's also. Anyway, I could keep going here. It's so unfortunate these food stocks are being crushed. Ooh, Jersey Mike's, you're right. Jersey Mike's did go public today. I actually want to deep dive more into this company. It looks like they're down 5% on their IPO day. I want some more analyst coverage. Looks like there's no net income forecast on analysts because they just IPO'd. And the 1 quarter of data we do get, they actually lost net income. So I don't know about Jersey Mike's. Speaking of the restaurant stocks to buy on the dip, super quick, and then we'll look at these other stocks. The best one to buy on the dip is McDonald's. McDonald's isn't your typical restaurant. It's not like Wendy's, where Wendy's owns all their stores. McDonald's is a franchise model where 80% of every store is literally a franchise, and those franchises don't own the land under the store. This corporation, the parent company, owns the land, so every franchise pays rent back to the parent company. They have they're in the top 10 most valuable real estate portfolios in the world, and also they are a royalty collector. All these franchises have to pay a 4 to 5% sales and marketing royalty from every transaction back to the parent company because all these franchises benefit from all the free advertising the corporation does. So anyway, pretty cool stock. I mean, and by the way, I don't just like McDonald's. I freaking love them. I actually own I own 20 shares of them. It's like third or fourth largest holding. I am down on my position though. Okay, next up, someone said Meta stock. Yeah, Meta. I love this stock, and if you're a shareholder, do not get scared out. Do not sell your position. You could buy Meta basically at the same valuation as me. I'm only up 2.4% on Meta. So their net income, it missed expectations, but it was because of a one-time adjustment. If we go to net income, analysts expected 18.8. They only did 15.8. Why did they miss? It's because of two reasons. One was a one-time severance charge. They laid off a bunch of employees and had to pay a $1 billion severance charge to them. And also they had a $2 billion net income impact because of a lawsuit payout. Like they lost a Digital Safety Act or something. So the net income includes that. So that's why it looks like they missed. The revenue growth was phenomenal, and their guidance was too. Revenue grew 27% year over year to $60 billion. And again, this operating profit and net income, it was technically like $3 billion higher. Let's see if there's any. MetaXplore is monetizing, surplus compute capacity. So they're literally renting out their excess GPUs. It's bad news for CoreWeave. Meta faces thousands of lawsuits over alleged harm to teen mental health, including a $1.4 trillion claim. Well, Meta's whole company is worth $1.37 trillion, so I don't think that's going to happen. There's always some lawsuit payouts, but Meta orders AMD chips, Meta and BlackRock anyway, excluding that, I'm not worried about Meta. They spent they spent $49 billion on CapEx this quarter, and that actually Meta now has a net debt position, and they used to never have a net debt position. So they barely made any free cash flow because they're spending pretty much all that they're making. Still, I'm not worried about Meta. The future forecasts are phenomenal. They're going to make $73 billion of revenue, $21 billion of net income. Pretty much half the world is on a Meta app once a day. They have 3.54 billion daily active users. And, they say no one in China is allowed on a Meta app. So like Instagram, Facebook, Threads. So potentially like 70% of the world ex-China is on a Meta app. And this valuation, the worst has got to be fully priced in at this point. I literally don't see Meta getting much cheaper. They trade at 20 times net income and only 17 times next year's net income. That, I could not see Meta at a 16 or 15 or 14. If they ever get that cheap, I will definitely be buying the dip even more. Even Morningstar says they're undervalued. Aggressive AI-driven improvements in its advertising ecosystem, unparalleled global network effects, and the potential to monetize surplus compute capacity will drive long-term value growth. And the valuation just looks very fair. So yeah, if you're looking for a nice dividend growth AI stock, social media stock as well, check out Meta. They're also a nice tailwind is they're now introducing ads to WhatsApp and onto Threads. Threads, they just revealed, had nearly the same amount of monthly active users as X does. Here's ARM stock. I freaking love ARM stock. So they reported earnings. This is a royalty company right here. They literally just collect royalties. It's crazy. Licensing and royalty fees. Like, check this out. 70% of the revenue is their royalty streams, and the other 30% is their licensing revenue. So when we go to the gross margins, you can't make this up. This is better gross margins than Reddit. 97% gross margins. And then they have 20% plus net margins, literally a money printer collecting royalties. They're making a couple hundred mil in net income a quarter, fortress balance sheet as well. The only bad part is they're really expensive. You know, they trade at 176 times next year's net income. That still to me is a little pricey, but anyway, they deserve to be pricey, especially, dang, they had a nice beat. Analysts expected 182, they did 270 mil in net income. So no wonder they're up 7.4% of the day. I really do like ARM. So yeah, next up, oh yeah, Lenovo. Let me see if I can find that one. Lenovo Group. Okay, so this is okay, I think this is the stock right here. So where are they headquartered? So they is this where are they headquartered? Okay, it's not Hong Kong. So they're headquartered in Hong Kong. So here's Lenovo Group. They had a massive gap up on earnings. I mean, dang, maybe they're part of the memory shortage. I don't know. Let's see if there's any news. Nope, I'm not seeing any news around them. Anyway, let's go see what their numbers were. They only traded at 13.9 forward PE. So Morningstar says they're fairly valued. Strong AI server demand and a dominant position in the PC market will drive revenue growth. A highly competitive landscape and structurally thin margins require some caution. What are their net margins? Oh yeah, so dang, so they're an international company, so they report in halves and full year. But yeah, they have like a 3%, lucky to have a 3% net margin. So and this is in US dollars. We've converted it. I don't think they report quarterly. Oh, they do. Okay. So they did 22 bill of revenue, and on that, they kept 640 million. So yeah, they do have some low margins, but anyway, this quarter specifically was a big beat. Yeah, this is exactly why they gapped up 20% on this day right here. Analysts forecasted in net income 296 mil. They did 520 mil, and that's not some one-time adjustment. Even on EBIT, earnings before interest taxes, they expected 563. They did 886, an insane beat. So congrats on if you own that one. Actually, I'm quite impressed with that one. What is this one? What do you think of Iron Mountain? What's up, Noah Floods? And then we can look at GMED and Super Microcomputer and Flutter Entertainment. Yeah, sorry if I'm missing some of these. I'm trying to get to all these. Amazon up after hours? Yes, sir, man. Cloud earnings were great. This is Google Cloud's Partner of the Year. This is Iron Mountain. This is actually a REIT, a real estate investment trust, which means 90% of their assets are real estate. And because of that, these REITs have to pay out 90% of their taxable income in the form of a dividend, or else they pay over 20% plus corporate taxes on it. So they're structured in a unique way. So that's why they have a 2.65% dividend yield. I do own this stock, full disclosure. Like, they have a 2.6% dividend yield on top of all this great stock price appreciation, but it's not abnormal for this one to have a high dividend simply because of how they are taxed. And also, you don't value this one off net income. The net income does not include the depreciation or the amortization, which is super important for REITs. You look at a metric called the AFFO, adjusted funds from operations, but they have only a 60% dividend payout ratio, lots of room to raise it. Their global data center business grew 47% year over year, and they have like $1 billion+ backlog. This growth rate is the fastest growth rate in the entire screen. Their corporate and other business grew 69%, also the fastest growth rate on the whole screen. Global records grew 11.8%. Yeah, they do the paper, like they're one of their biggest customers is the IRS for paper disposal. They send metal trucks because in like hospitals too, whenever you have these important papers, you shred them. You can't just throw them away in the trash can. You actually hire companies like Iron Mountain to come and dispose of it for you in some fortified truck. Pretty cool. Fascinating company. And actually, I've done a few YouTube videos going over their investor presentation is fascinating. Out of every REIT that exists, like there's Realty Income, like Agree Realty, Prologis, out of all the REITs that exist, this is one of the most impressive I've ever seen. The only other REIT that I own, and these always have nice dividend yields, is CareTrust REIT down here. This is a senior housing care, skilled nursing REIT right here. Basically no debt at all, which I love, a 3% dividend. And they specifically focus on senior housing care facilities with people with dementia. Anyway, yeah, dang, this is our main portfolio. We're up 1% on the day. This is what's crazy. Y'all won't believe this. Quick portfolio update. This account grew 9.5% on the day. I've never had a day like this, I don't think ever. I've never had a 9% individual day here. But Amazon is up 8% on the day. Our Amphenol stock reported earnings. They were up 6% on the day. Comfort Systems is up 11. That's our largest holding. Our largest holding is up 11. Our second largest holding is up 12. Amazon's up now like 10% when you include the after hours and the 4% gain on the day. It's been a great day. Great earnings. So, what's next here? Oh yeah, Flutter Entertainment. I meant to get to that one. So, dang, this stock is at pretty much an all-time low. It's around their 2022 price. But yeah, the past year has been devastating. They were $300 literally 9 months ago. Now it's 102. So yikes, what happened here? Oh, it's this industry. So on it, like the sports book, I actually can't talk about this industry on TikTok, but all the gaming properties, like all the Vegas stocks, if you know what I'm talking about, are all being out innovated by brokerages, companies like Polymarket, basically prediction markets. Anything you do in the sports book, you can literally do on your brokerage through like the World Cup. Prediction markets were all over that. So I feel like this is a tough industry, but what are their and the net income's kind of choppy, you know what I mean? They lost 700 mil, but I don't know. I don't know about this industry right here. The gaming, Vegas gaming industry. I'd be a little cautious on that. And a lot of the casino stocks are doing terrible. You know, Caesars Entertainment, they're lower than their 2017 price. MGM Resorts, what are they at? MGM is dang lower than their 2005 stock price. Let's check Las Vegas Sands. LVS, Las Vegas Sands. Dang, they're lower than their 2006 stock price. So, you know, it's not just them I'm picking on. It's kind of the whole industry that, you know, I'd kind of just stay away from. Um, you think this is a reversal for memory or a dead cat bounce, specifically Micron? So yeah, Micron SanDisk, I would be cautious of the super long term, but honestly, I think for short term, medium term, most likely this stock will get close or hit a new all-time high in the next year. It might take 6 months though, because we're really just waiting on these earnings reports. Here's why it's tough to be bearish. Did you know Micron only trades at 19 times net income and only 6 times next year's net income, a 6 forward PE? It's like that's not peak bubble valuation in my opinion. And look at these net income forecast. It's going to hit 35 bill next quarter, 39 billion the quarter after. If we zoom out, net income has never been close to 39 billion before. But it's the 2028, 2029 numbers you got to be cautious of. They can't sell, you know, memory, this commodity at a 68% net margin forever. And this is where Morningstar kind of alludes at. So they actually say they're a bit overvalued. While the AI-driven memory pricing upcycle and soaring high bandwidth memory demand provides robust near-term tailwinds, the sad part is the inherent commodity-like nature of the industry and the looming risk of a steep cyclical downturn driven by a future capacity overexpansion requires caution. So it's really the 2028, 2029, 2030 numbers you want to be careful of. And that's why I don't consider this a buy and never sell stock, but I believe they'll probably do great for the next year, maybe even 2 years. But it's that long-term thesis you want to be cautious of, as they do just sell a commodity. And CXMT, actually China's most valuable company, is this is China's most biggest company by entire market cap. They literally IPO'd 3 days ago. They were up 500% on their IPO. Another memory company, and Apple is actually now buying memory from this company, which is interesting. Apple's buying Chinese memory because it's so freaking expensive. Reddit is cooked. How's Reddit doing now? One of my favorite holdings. Dang, Reddit is down 12%, and they had the insanely good numbers when I first glanced at them. Oh, but so Reddit reconsiders the 60 million AI annual AI licensing deal with Google amid traffic and revenue concerns. So that's something that might be hurting them. So the core concern is that Google AI search summaries may reduce referral traffic to Reddit, pressuring its advertising revenue model. So that might be what's setting the stock down. I don't know, but I love Reddit. I might deep dive into them a little later. How's Apple doing now? AAPL, they reported earnings 30 minutes ago, so they're down 4.3%, which honestly isn't that bad. I mean, they were pretty much at an all-time high. They're basically right here. Just going to look like a normal day for Apple when they open up tomorrow. So, Apple reports Q3 earnings with revenue and margin guidance and focus. Anyway, is there any like Apple gained smartphone share globally, CEO says. It used to actually, the number is broken down back here, like smartphone market share. They had a 25%, and they have their own smartphone chip market share. They make their own chips now, which is actually, I think, slightly hurt Qualcomm. How'd Qualcomm do on earnings? Yeah, Qualcomm, I remember hearing them saying that Apple's moving away from them a little bit. Oh, yeah, look at that. Qualcomm reports Q2 revenue decline, issues weak Q4 guidance as Apple revenue falls and supply costs rise. The iPhone modem share falling. Anyway, Qualcomm I do find interesting. This is a royalty company as well. Pretty interesting. Like if you didn't know, read this top line here. Qualcomm collects royalty income on the majority of 4G and 5G handsets sold as it holds many essential patents used in these networks. They actually just announced they're doing a 10% price increase as well. Is there any other news? Anyway, yeah, 24 forward PE, but they have growth concerns. Like if we go to the revenue, the lifeblood of the company, it actually declined 4% year over year. So that's negative. That's not great. Actually, yeah, that's what would scare me. I don't know if I'd buy Qualcomm actually. So let's do GMED stock. Globus Medical. Hey, there must have been something that impressed me. They're on my watch list. So let's see what this stock does. I'm actually very intrigued. So they only trade at a 19 forward PE or only at 19 times next year's net income. They do, okay, here we're going to try and pronounce this. Musculoskeletal Solutions. That's up 27% year over year. So that's pretty good. Oh, wow. They had great net income numbers. And that was real beat. Analysts expected 101 million net income. They did 124 million. Wow. So revenue's up 27%. Net income grew by 64. It grew even faster, which means pricing power, margin expansion. Net margin went from a 12% to a 16%. And look at these margin, like year-over-year growth rates. At this growth rate and these net income growth rates, what's the net income going to be at the same time next year? Oh, wow. And another thing that just takes a ton of risk off the table is when you have no debt. Literally a debt-free company. Whoa, what's the free cash flow? Printing over 100 to 200 mil of free cash flow a quarter, 100 to 200 mil of net income a quarter, no debt. And so this is some medical device company doing musculoskeletal something right here. Yeah, check that out right here. Look at that. So I guess they maybe could get into like a robotics play. Oh no, I clicked off their website. So anyway, some sort of a ecosystem of advanced technology to improve safety and care for patients and hospital staff. Huh. Anyway, some sort of a medical device company. Pretty interesting, actually. Huh. And they're only at a 19 forward PE, good margin expansion, good beat on earnings. I can see why they've done so well. So what is Foxconn? You'll have to give me a ticker symbol, or maybe I can find it for you. Foxconn. I don't know if this is what you're talking about. Foxconn Industrial Internet? Maybe this is the stock. You know what? This is some ADR Chinese stock, but we'll look at it anyway. We'll convert the currency to US dollars. Oh, then we'll look at AXTI and Super Microcomputer. So Foxconn, actually their stock has done very well. So we have converted the currency to US dollars. So they do 3C electronic products. Huh. So the industry is cloud computing, which, is a big growing business right now. Cloud. Looks like they had a big miss on revenue, but the stock still went up despite that. Net income, yeah, this is in US dollars. This is great net income growth rates. They're easily making 1.5 to now 2 billion net income a quarter. And it's going to hit, it's about to hit 2.4 billion in net income. So they are literally about to hit record net income. Yeah, net income's never been close to 2.4 billion before. So they're in computer electronics, headquartered in Beijing. Research and development of electronic products and components, is a global leader in high-end intelligent manufacturing, industrial internet services. Huh, so some sort of a Chinese cloud AI infrastructure company. I can see why the stock has done well. They have great forecast in net income. So Super Microcomputer, this is like Dell, where they are the company where whenever you go buy a bunch of NVIDIA chips, you hire Super Microcomputer to install it in your data center for you into the racks and everything. Unfortunately, this one has had a bad management system. Management is really bad. Like they fell down here. There was no earnings report this day. They fell because Taiwan headquarters or Taiwan police raided their headquarters. back here. This is when I used to own the stock. We were waiting for them to report earnings. They literally just I was watching. They literally just didn't report earnings that day. They just did it. The market flipped out. Like when that they had to get new accounting teams and everything. They actually just diluted all shareholders by 20%. So they issued a 20% of all the shares to raise cash as well. That's why they gapped down on this day right here. But the valuation, honestly, it seems decent. I mean, an 8.8 forward PE, they only trade at 8.8 times next year's net income. But I think they're trading cheap because of all the shenanigans they've gotten into. But if analysts are right, you know what I mean? It's like hard to be bearish. They're going to do 630 mil in net income next quarter, 420 mil the quarter after. And yeah, the net income has finally started to grow again. Looks like they had a little hiccup a year ago with these net income declines, but interesting there. Let's see if there's any news. So Supermicro Computer doubles gross margin guidance to 17%, secures a record $60 billion order backlog. Jeez. So yeah, they rose $7 billion in capital and faces ongoing DOJ indictments, export control investigation, governance concerns, and negative free cash flow. Supermicro launches H15 server portfolio powered by AMD processors. Cool. Anyway, the better version is actually Dell Technologies. Dell does the exact same thing that Supermicro Computer does. Dell might be a little more expensive though, but honestly, not even that expensive. Like this is cheaper than the S&P 500's multiple. The S&P 500 trades at a 26.5 PE. They're at a 24.4. Even that's the crazy part. This is why Dell, the rally's not over, in my opinion. Even though they've had this crazy rally at a 24 forward PE, that doesn't seem like a maxed out valuation. All right, so AXDI, yeah, quickly about this one. This is the raw substrate, rare earth mineral provider for a lot of semiconductor equipment. And they just reported earnings. They are up 20.6% after hours. They just announced an indium phosphide supply agreement with Lumentum through 2031, which is a huge fiber optic supplier for NVIDIA. NVIDIA took a big investment into them as well. But yeah, basically they sell like gallium and like indium. Here's their actual investor presentation right here. Indium phosphide and gallium arsenide, which are used specifically for data center and semiconductor equipment. So it's a pretty interesting company right there. But I still would be cautious. Let's see what the net income is. I know the valuation is ridiculous, but oh, wow. Okay, this is actually great news. So if we zoom out, for all of history, excluding 2022, for the past couple years, all they've done is lost net income every quarter. And again, they just reported earnings. I don't even know what it was. Actually, let me go check. Sees Q3 EPS of 32 cents. What are analysts expecting? They only expected 5 cents next quarter. No wonder they're up 20%. So reports Q2 EPS of 19 cents versus the 7 expected. Revenue of 47 million. What do they expect? They expected 34 mil of revenue. They did 47. Holy moly. And they expected 6 cents of EPS and they did, what was it? Like 19? That's great news for the stock. They're like basically what I was trying to get at was they're literally about to get net income positive. They're going to make net income potentially for the rest of the time now. So interesting there. What platform are you using? Yeah, hey, I'm on a brokerage right here. It's just like Charles Schwab and E-Trade. If you want to get it, I actually have an affiliate link linked in bio, or you can just type it into Google, brokerage called Moomoo. But yeah, this is my favorite brokerage linked in bio. Completely free, cost nothing. No hidden fees or anything. Actually, cheaper fees than Webull. These are all brokerages right here. I actually have them linked in my link tree, the affiliate links for all of them, but like Robinhood as well. But my favorite brokerage, if I were to get one, lowest fee and best analysis tools, is Moomoo, linked in bio. So Foxconn assembles for Apple. Oh, really? What's up, Tom? He says, great call on Microsoft. Went triple leverage. Hey, I don't know. I'm glad you did great on Microsoft, but I don't know if I would not recommend going into leverage. Take out debt to buy stocks. It can be bad, especially in a bear market. I actually I've never taken out margin or debt to buy stocks, but great play there. If I was ever going to take leverage out on a stock, it would be a stock like Microsoft to do it on, one that's just quality. Just got a couple more AppLovin. Dude, nice. AppLovin is phenomenal. I actually want to cover Raytheon real quick, then we can go to that one. What's up, Hyperflow? This side, we can help you, or hey, what's up, Hype? So anyway, here's Raytheon right here. This is that aerospace and defense company. So I don't want to own the war. I want to own the company selling the bullets. And that is the position Raytheon is in, with a massive backlog as well. Look at this, a record $289 billion backlog. when your whole company is worth 288 billion, that is invaluable. Having that foresight into the future of, guaranteed orders, $290 billion backlog that's bigger than the whole company's worth. Pratt & Whitney surges 43% as RTX prioritize engine repairs. Raytheon holds production talks with Ukraine on Patriot intercept missiles. Have you ever seen those videos where like they show the U.S. military shooting a bunch of ammo and bullets? It's like negative 10,000, like pure beneficiary of this company. They logged a 5 billion plus in Patriot bookings and 10 billion in international defense awards. So anyway, this one should benefit, especially if war fears start to escalate again. Morningstar says they're fairly valued. Robust aftermarket demand in commercial aerospace and structural increase in global defense spending will drive long-term value growth. They own Raytheon, Pratt & Whitney, and Collins Aerospace, and they have a nice dividend. Even at this all-time high level, if you bought the stock right now, you get a great yield higher than the S&P 500. You still get 1.3% of your money back every year just in a dividend, and they raise their dividend every year faster than inflation. So no wonder they're at an all-time high with a backlog like this. I actually own one of their main suppliers, MOG.A, which is also nearly at an all-time high right now. They own a lot of the patents and components that are made in this new Patriot missile. Like they actually own the heat-seeking missile patent. Every single satellite launched, like the Voyager spacecraft that's still out there, uses Moog's patented equipment. So that's another great aerospace and defense company I kick myself for not buying more of. Next year report earnings tomorrow, so that'll be interesting. Can you look at Roblox earnings? Yeah, Roblox, I've always been saying this is a very bad stock. Don't buy this one. They are down 13% after hours. I can see why. Basically, the thing is, like, it's a tough sell for me. This is not the kind of stock I want to own. Despite, they have a lot of daily active users, their customer base, these people that are playing Roblox, they don't have credit cards. So if we go to Roblox's net income right here, this is what's insane. They lose 200 to 300 million of net income a quarter, and the losses are worsening. You see these red year-over-year declines? They're worsening their losses. On top of that, they're highly leveraged. 9.5 billion of debt, same debt as assets. How are they going to pay off all this debt, especially when they're adding to the debt pile every quarter, losing 2 to 300 million? So I wonder if we can find their net income losses right here. Negative 26 of EPS. Sorry, I don't know how to. Anyway, I would just be very cautious on Roblox. Highly leveraged and just very far away from profitability. Big stock-based comp issue there. ETF now? Hey, what ETF do you want me to look at? I'm a big fan of ETFs. Instead of just buying one stock individually, like the S&P 500, the average hedge fund, retail investor can't beat the S&P 500, so why not own it? What app is this? Yeah, hey, again, I'm actually on a brokerage, just like Schwab and E-Trade. If you want to get the brokerage I'm on, I actually have an affiliate link linked in bio, or you could type it into Google. It's a brokerage called Moomoo. But yeah, check it out, my link there. What's that one company that makes Zen? Hey, that's PM, Philip Morris right here. So yeah, they're at an all-time high right now. It's actually been a phenomenal dividend growth stock. Let's see if we can find any news on that. Philip Morris International opens 1.2 billion. Oh, wow. Speaking of the news, Zen Manufacturing Campus. So anyway, I can't really talk about this industry on TikTok. But yeah, their smoke-free business, Zen, has been doing phenomenal. Their acquisition of Zen has literally been so accretive to their net income. And look at this. So the stock is at an all-time high right now. Every year, on top of the stock price appreciation, they've paid a 3% dividend. Actually, they were a spin-off from Altria, MO stock, and MO is down 10% on the day. So, narrowed guidance from Marlboro, volume decline. Okay, anyway. That industry I'd be careful with. Seems less and less people are pretty happy about 20 shares of Amazon before earnings. Dude, I bet you are too. You got the same amount of shares as me. Amazon's up now 9% after hours. This is a phenomenal ETF in one. So Amazon AWS grows 37%. Their cloud business specifically grew 37%. That is the fastest in 18 quarters. So the growth rate is reaccelerating. We'll deep dive into their earnings a little later, but they also had a big gain on their Anthropic investment. Has anyone heard of Anthropic? Claude Code, it's like the number one LLM. They own 20% of that whole company, and they're trying to IPO at like a $600 billion valuation. So let's see what's next here. If you were into crypto, look at Cat on Robinhood. Yeah, hey, I personally don't own any crypto, but I do own Robinhood, which is kind of like a pseudo crypto play, kind of like a SoFi as well. Whenever Bitcoin goes up, they kind of move with crypto. But yeah, I actually feel bad for a lot of crypto people because Bitcoin has done very bad this past year. I just read an article. The average retail investor is now down on their Bitcoin investment. And Bitcoin over the past 5 years has underperformed every traditional asset: gold, silver, S&P 500, NASDAQ, stocks, and even bonds. Part of that might be because of Michael Saylor. Uh, anyway, Bitcoin could be a good buy. I don't know. Here's one thing I've heard about. Like, I personally don't. I wouldn't allocate much into crypto, but like, let's say you owned every single share of Coca-Cola or every single share of Apple. You're left with a company that makes net income, makes free cash flow, pays dividend, does stock buybacks. But let's say you literally owned every single Bitcoin that exists. What are you kind of left with? It's not like it's kind of the value is just what everyone kind of agrees upon. Or yeah, like it's kind of hard to like pinpoint a value on the company. There is no forward PE or free cash flow yield, but that's what some people love about Bitcoin. It's a catalyst-free asset. Like they can't miss on net income. They can't miss on net margins. So it's kind of interesting there. Nintendo stock. Yeah, so Nintendo is doing really bad because of memory shortage. Their Nintendo Switches are actually losing money now. They're selling them at a loss because of the memory shortage. Should we get any news on Nintendo? Dang, no news on them recently. Anyway, they look just like Sony stock. Sony stock, which owns PS5, is also on a big downtrend. They're a Japanese company, so we'll convert the currency to US dollars. I believe Nintendo annual oh here what the annual playing users. So check that out. It went from 87 million in 2021 to 128 million annual players. Well, here's their net income. This is converted into US dollars. This is also the only way to get exposure to Pokemon. They own 10% of Pokemon. But yeah, for the full year 2026, looks like they report in full year, but 2.67 billion in net income. Anyway, we zoom out, the net income is kind of not growing too much, but it's interesting here. All right, Nintendo. I wish I could give you better thoughts on this stock. A 2.7% dividend yield. Morningstar says they're undervalued. The highly successful launch of the Switch 2 console, combined with aggressive expansion of in-world re-owned intellectual properties into border entertainment ecosystems, will drive long-term value growth. Did they like break? So I like this. They break down what the bulls are saying. The value in Nintendo's popular characters has not been damaged, and they will expand the user base. But while the characters are popular, most of Nintendo's earnings are still constrained by its own hardware shipments. People could be satisfied with Nintendo games provided on smartphones and might not decide to purchase its consoles. Tough competition in the game industry will face Nintendo to cut the price of hardware, which may hurt profitability. And the memory shortage is crushing margins. Xboxes, PS5s, and Nintendo Switches are all going up by over $50 because of the memory shortage. She made a video about that, a short not too long ago. What is the JEDI ETF? Someone said the Defiance Drone and Modern Warfare ETF. So you'd think this stock would be at an all-time high. You look at GE Aerospace, Raytheon, Moog, they're all at all-time highs. What does this one own? Dang, it owns a lot of the bad stocks. Sadly, I really would not own Redwire, UMAC, Ondas, C3AI would not own, Archer Aviation's trash, Red Cat. None of these companies are even close to profitability. So sadly, I would not own this stock right here. I bet there's some other good aerospace and defense ETFs. Ah, you know, I want to aerospace and defense. Like, I want to find an actual aerospace. Actually, here's a good way to find an aerospace and defense ETF. You go to the top aerospace and defense company, and then you scroll down to what ETFs are they a part of. So the ITA, the iShares Aerospace and Defense ETF. So we looked at the other ETF. That one's like down bad the past couple months. This ETF is at an all-time high because it owns the good ones. You know, GE Aerospace, Raytheon, General Dynamics, Howmet, Lockheed Martin, Northrop Grumman. ITA is interesting. It could be a better alternative. But hey, Jetty, what's the yeah, 0.69% expense ratio fee. I would be super cautious with that one. And I'm a fan of just individually picking your own aerospace and defense stocks like Raytheon, GE Aerospace, Lockheed Martin looks cheap. Can you look at Intuit, please? Yeah, let's do Intuit stock. This is your TurboTax QuickBooks company, and they're getting hurt from AI and DIY tax filers. Their DIY tax filer segment is down like 30% year over year. So dang, analysts downgrade Intuit to hold, cuts private. Can't talk. Dang, I've been streaming for like 2 hours. Sorry. Cuts price target to 304, citing AI risk and competition concerns. Huh. I don't know. He doesn't really give any in-depth analysis on AI hurting the company. Anyway, the worst fears are probably fully priced in. The stock is already down like 50%. They're only at a 17 forward PE or trading at 17 times next year's net income. And Morningstar thinks they're undervalued. The company's dominant market share in small business accounting, coupled with high customer switching costs and expanding product synergies through its AI-driven expert platforms, will drive long-term value growth. So yeah, Q3 is their best quarter every year. Obviously, that's tax time. And look, if we should almost pull this up annually. Like this is what you want to see. Like the fundamentals. Like this is the thing, they're falling because of AI fears. They're not falling because they're missing on their metrics or missing on net income. It's literally just sentiment around what AI is gonna may or may not do to the company. Like, let's see, TurboTax could face material headwinds if the government sponsored a free tax filing program if it gains traction in the U.S. Other small business accounting software competitors like Xero are looking to expand in the U.S., leading to stronger competitive pressure on QuickBooks. Anyway, but here's what the bulls are saying. I like reading what the bulls and bears say. Synergies between Credit Karma and TurboTax should continue to deepen. Their enterprise suite, powered by QuickBooks and MailChimp, is a unique product that should drive Intuit's online ecosystem as the company penetrates Intuit's done-for-you products like TurboTax Live. Okay, cool. Interesting there. And they're a nice little dividend payer as well. How much money have you lost in the past 3 weeks? Hey, that's a great question. So I don't know about 3 weeks ago exactly, but here's the 1 month performance. So like, look at this. From 1 month ago, this account is down $5,300. So I love being fully transparent. Good question there. So we're down $5,300 in 1 month over there. And this one, we're down $500 the past month. And then our Webull portfolio, let's check this one out. Year to date, we're still doing great, but from 1 month ago exactly, we are down $400 in here. So yeah, we're down like 6 grand the past month. I love being fully transparent. I'll share all my buys, my lifetime. Like here's my lifetime performance. Webull, we're only up 30.4% all time, but this is the account that's really led us to outperform. All time, we're up $29,000 in this account, and today we've made a lot of that back. We're up 9.33%. Yeah, I'm not worried. I'm actually looking. I've been looking to buy the dip on some great companies because still, we're really tech heavy. We're super tech heavy. So we're even after this little dip, we're still up 55% year to date versus the S&P up 9%. But yeah, good question there. Hey Nate, got into MCore at 680. Dude, good stuff. Yo, I literally made a video yesterday. Literally yesterday, I made a video saying MCore, buy this stock, and Comfort Systems, buy that stock. Both companies are up 10% plus today. Just ridiculous. Hey, what's up, Samir? Says, what are you currently buying? I haven't been buying too much, but here are all my exact purchases in their exact order. So literally my most recent purchase has been Citigroup and Rollins, ticker symbol C, Moeller Industries. These are all my exact orders and purchases in order. So yeah, basically Citigroup, Moeller, Netflix, and I've been buying a little bit more of Microsoft and Reddit. Reddit just reported earnings. They're down 12% now on the day, despite their best earnings quarter ever. AI search concerns linger, so that could be something. All right, yeah, MCore, great stock there. What about silver, SLV? Yeah, silver stock or the actual commodity of silver. It could be a good short-term hold. You know, this is a nice safe haven asset. You know, inflation fears, war fears escalate. Gold and silver usually do good in those environments, but you know, this doesn't pay a yield or anything. And historically, buying gold or silver does not beat the S&P 500. So if you're just looking to own something forever, I would personally pick the S&P 500, but I would not say anything wrong about just buying a little bit of silver or gold as a little hedge. All right, so Citigroup, what trash? Hey, why you say they're trash? Do you have any actual fundamental reason? Or First National Bank? Let's check out that First National Bank. Is that, huh? Anyway, yeah, all the bank stocks are doing great. They're all at like an all-time high right now. JP Morgan, Goldman Sachs, the whole banking industry has been a great one to own. Bank of America hit an all-time high today. Let's see what Citigroup is. Yeah, Citigroup's pretty much at an all-time high. Great numbers on Citigroup. All right, so All right. Is Powell a buy after the dip? I know the PE is high. I don't. That's the thing. If I was going to buy Powell, I wouldn't buy it meaningfully. I would wait until they report earnings literally in 3 4 days in 4 days. So that's something I'm really interested to watch. They have no debt at all. A huge data center beneficiary company, $2 billion backlog with no debt. I'm very curious to see what they do. Um. One man's trash, another man's treasure. Hey, what's up, Monkey D. Luffy? Cities over leveraged. Really, I don't think they are when I check them. But I could be wrong though. What about Meta? Oh, dude, Meta. Yeah, we actually deep dive into them not that long ago. Basically, their earnings were total one-time adjustments. So if we look at their net income versus this is what's freaking people out. Analysts expected 18.7 billion net income. They only did 15.8 billion, but this includes a one-time adjustment of a 1.4 billion severance charge and also a 2 billion plus EU digital services lawsuit payout from EU fining them. So when you exclude that, they actually beat on net income. And so that was the only bad part about their earnings. But yeah, the actual core social media business of Meta, their new metric is they have 3.6 billion daily active users and they're dog cheap. Any AI fears I feel are fully priced in. They're only at a 17 forward PE or 17 times next year's net income. I think we're close to the bottom. I don't think the forward PE is going much lower. Like it'd be super weird to see Meta at a 16, 15, 14. That would just be ridiculously weird. And I believe AI is going to improve their ads. I love what Meta is doing with the Meta Ray-Ban glasses. They have an 85% smart glasses market share. They're now getting into a smart watch and a ring as well they introduced. So I'm a fan of Meta. In full disclosure, I do own a bit of their stock. And I'm just barely up on them. I'm only up 2.2% on Meta. So yeah, they sent my portfolio down a bit today. What is this right here? Remco and PH stock, and then Meli. Yeah, we can look at MELI stock. So we'll check that out. So Parker Hannifin. I actually forget what this company does. They're at like a multi-year high right now. So congrats if you've ever bought this stock. You're definitely up on your position. They pay a 0.75% dividend. They raise their dividend every year faster than inflation. Not too shabby. A 31 forward PE though, so they're a diversified industrial company. And they're also in aerospace systems. So I bet that business is booming right now. Let's see what the revenue was. So yeah, the revenue growth rate is finally reaccelerating. So like if we look at the revenue growth rate, it's up 10% year over year. That's the fastest growth rate on the entire screen. Yeah, it's actually the fastest growth rate in like 10 quarters. So yeah, 10 double-digit revenue growth. A little one-time adjustment. It says their net income fell by 6. It didn't actually. It was up like 8%. Great free cash flow. Yeah, even with the decline, they're still making pretty much a billion. Oops, they're making a billion in net income every quarter, like 800 to 900 mil of free cash flow quarter. And so analysts expected this. Actually, analysts expected 870 mil in net income. They beat. So for the past 3 quarters in a row, they have beat on net income and they beat on revenue for the past 3 quarters in a row. So no wonder they're at an all-time high. They keep gapping up on really good earnings. Ooh, hold up here. Okay, so anyway, yeah, nice little 0.75% dividend yield. I would be a little cautious buying right now at an all-time high, a 31 forward PE. But yeah. Oh, what's up, Paul? He says, y'all look at SoFi yet? What about AMC stock? Yeah, AMC is one of the worst stocks like ever. This could be a fun little short-term swing trade, or this is a day trade stock. This is not a buy and hold kind of company. You're buying this hoping Roaring Kitty tweets something. You're not buying them because of the fundamentals, because you like movie theaters. So yeah, anyway, don't buy AMC unless it's a trade. What company was that? Hey, I think the company we were looking at was Parker Hannifin, PH stock. And then we looked at Meta. Oh, hey, yeah, watch out for the people in chat here. Yeah, I sell nothing. I have no course book. I've already had to ban 2 people with the same name and profile picture as me. I'll never follow you, DM you, and I sell nothing. All right. So, what's next here? Oh, yeah, you looked at SoFi yet? Yeah, let's pull up SoFi stock. This is one of my favorite fintech stocks out there. I do own this one, full disclosure, and I own them because the fundamentals are great. I actually literally just bought more SoFi yesterday, and here I'll show you. I bought, well, not much. I bought 2 shares of SoFi at $15.26, and hey, it's up 8% on the day. I bought them after their earnings report. They do have really good fundamentals, I believe. If we look at the forward PE, this is why it's hard to be bearish. SoFi only trades at 21 times next year's net income. I mean, I don't see it getting much cheaper than that. This doesn't have their most recent quarter because it's still low. This is their most recent quarter down here, but this is last quarter's data. But if we look at their lending business, that grew 55% year over year to a new record. That's actually the fastest growth rate on the entire screen. And not just the lending revenue, but also the financial services. That's up 42% year over year. After grew 101, after grew 85, after grew 244. They are just on a streak of growth. And that's why this is one of my favorite growth stocks. If you're going to own a stock that doesn't pay a dividend, you want to make sure they're growing their fundamentals and growing them fast. And SoFi checks that box. Revenue grew, and this is their most recent quarter, revenue's up 42% year over year. Net income is up by 61%. That means margin expansion. Net margin grew by 12.3% year over year. So they're easily making like 160, 150 mil in net income a quarter. But look at the forecast. The next 2 quarters are huge. They're going to hit record net income. The net income's never been close to 260 mil before. They're going to do 234 mil next quarter and then 260 million next quarter. So that's why I love SoFi, and that's why you got to do a forward PE. And they're only at a 21, and that's way cheaper than the S&P 500. The S&P 500 trades at a legit 26 PE, and this one I feel like is going to grow EPS faster. I mean, especially with this growth. So let's see what the bad news was. I think their crypto revenue, they gave a little cautious outlook. Oh, no, they rose their full year guidance. Well, I don't want to read all this, but so the CEO noted citing potential Fed rate hikes and reinvestment in growth, including a stablecoin initiative for holding EPS guidance steady. Yeah, actually, if y'all didn't know, rates are pretty much going to be hiked next quarter. Well, the 65% chance from the Fed dot plot meeting for the September 16th meeting, there is a 65% chance rates are going to get hiked by 25 basis points. So yeah. Why does Hood continue to tank with good fundamentals? Robinhood, good question there. They are just too expensive. Robinhood, I believe, is their crypto revenue fell because Bitcoin's doing so bad. But Robinhood, even on this dip, they're still at a 37 forward PE. I believe they're just getting to a more normal valuation. And they've had a great past couple years. I'm personally up 600% on my SoFi. Their prediction markets are so profitable for Robinhood. So yeah. That's my favorite time to buy a stock, though. Whenever, they're not falling because of some net income miss, or they're not falling because they missed on their financials. It's just momentum and it's just sentiment. All right. SMPL. Oh, hey, Michael, we looked at SMPL the first time you said that stock. Yeah, that's that protein stock or whatever. Interesting. Oh, yeah. Hey, what's up, Narc? He says MELI. This is your international Amazon. So this company does pretty much exactly what Amazon does, but specifically in Brazil markets or South America. I think I have that right. Maybe I'm thinking of another company. No, yeah. So yeah. This is Brazil Amazon. So 52% of the revenue is Brazil, Mexico's 22, Argentina's 20. So they literally do exactly what Amazon does. And the one thing that's really hurt the stock is margin compression because of Amazon. Amazon just announced a 1 to 3 hour delivery in Brazil's top 20 cities, which is big new competition for them. This is the rough part. So if we look at revenue right here, revenue's up 49%. So great revenue growth. Revenue's up 49, but net income fell by 15. And that's real as well. The operating profit fell 19, net income fell 15. So what does that mean? That means margin compression. Gross margins fell by 6.5. Net margins fell by 43. So yeah, this is the tough part. Net margins. So I don't know. What's the forward PE on this company? So see, that's the tough thing. Even on this dip, a year ago they were, $2,600. Now it's $1,800. Even on this dip, it's not cheap enough to buy. At 46 times next year's net income and the kind of margin deterioration that they have, I would be cautious. I mean, they're definitely not going bankrupt. They're still easily making 400, 500 mil in net income a quarter, and revenue growth is great, but it's that margin issue. Amazon and Reddit are up. Yeah, Amazon, I'm so happy. Dang, Amazon's now up 9 or 10%. Amazon just hit a 10% gain. Yeah, real quick, their Amazon AWS grew 37%, the fastest in 18 quarters. So the growth rate's reaccelerating. Amazon pursuing own frontier model for cost control. They own a 20% of Anthropic. They own 9% of OpenAI. Like this is a huge AI. Like Amazon's an ETF in one. Jersey Mike's. Yeah, hey, I can't they don't even have an investor presentation or an investor relation on their website. So I couldn't find any real financial metrics on Jersey Mike's. They just IPO'd today. We only have 1/4 of data, and the 1/4 of data we get, they made 185 million revenue and they lost 30 million on that. So I am curious to see if they're like a McDonald's, if they have that real estate royalty model that McDonald's has. Someone said T3 defense, please. Yeah, hey, Iron, if you have a stock, please give me the ticker symbol. I've not heard of that one. An IBM stock. IBM. All right, so here is IBM. This is an interesting quantum and software company, but their software company or their software part of the business is really getting hurt by AI. So IBM revenue misses and they cut their full year guidance growth to only 4 to 5%, which is, barely beats inflation. IBM warns memory shortage expected to persist near term. IBM or Wall Street analysts cut IBM price targets following Q2 miss and guidance reduction. But here's some good news. IBM announces multiple quantum advantage milestones. This is one of the companies that the government gave them money for free, interest-free loans. And IBM AI accounts for over 50% of consulting services. CEO highlights enterprise AI opportunity and Anthropic partnership. Anyway, wait, what was the last news? IBM agrees to acquire HRL Laboratories from Boeing and General Motors to establish dual-track quantum strategy. So they've kind of shifted. It's mainly their Z frame. They sell something called the Z mainframe, and that's the sales of that are down 40% year over year. But yeah, this is why they're falling like every software stock. Still half of the revenue is from software. So what app is that? Oh, hey, Parker, what's up? I'm actually on a brokerage, just like E-Trade and Charles Schwab. If you want to get the brokerage I'm on, I actually have it linked in bio there. Or you can type it into Google, brokerage called Moomoo. But yeah, the nice thing about IBM is their dividend. You get a 3% dividend. You buy a share right now, you get 3% of your money back just in a dividend every year. And historically, they give decent stock price appreciation, like 3 to 4% stock price appreciation on top of the dividend. But yeah, their infrastructure revenue fell 7%, heavily impacted by a 42% drop in the IBM Z mainframe sales. Consulting revenue is flat. Software revenue grew 5%, driven by Red Hat. Anyway, that one I got to do more research on. I mean, the valuation's starting to look really cheap, just like a lot of software stocks at 20 forward PE. But they're a really interesting quantum company, and it looks like they just said they have reached multiple milestones for quantum technology, and they're acquiring HRL Laboratories from Boeing and GM for dual-track quantum. All right. Reddit. Yeah, back on Reddit, it's an interesting why they're falling. I don't know why they're falling. I think it has to do with this new Google news that even Reddit themselves is actually reconsiders this 60 million annual Google licensing AI deal because whenever you get like the AI results, it just shows you the AI answers, but it doesn't guide them to Reddit's website. And that might hurt, and that's what's going to hurt their advertising business. If it shows up in the AI search results, but then they don't actually go and click on Reddit. So they're actually considering like ending the Google partnership, which was a huge high margin growth, 100% margin stream of revenue for them. But yeah, let's see. And their ARPU, they now make $6. I love this stock right here. They have $6.20 of average revenue per global user. Revenue, net income beat like crazy. 130 million daily active users. That's a huge daily active user metric. They're known as one of the last like real places on the internet. Do you go live every day? I'd really try to. If not every day, every other day. Yeah, if you want to hit the follow button, I appreciate that. And yeah, watch out for people impersonating me. I sell nothing. I have no course book. But yeah, actually tomorrow, if you come back, Thomas, we'll do a real deep dive into Reddit's earnings because Reddit's earnings have not like loaded in. Reddit's earnings came out literally 5 minutes ago. So we can read the headlines, but they wouldn't be like loaded in down here for us to really analyze. But next stock someone wanted me to say is Elf stock. What's up, Nate? And then we can get to Vertiv and DFNS. We'll look at that one too. So here's Elf Beauty. They're technically lower than they were in 2023, which is 3 years ago. They had a weird miss on their net income. So yeah, dang, their margins did kind of fall. So yeah, the analyst forecasted them to make 6 million and they lost 49 million. And the net income forecast is going from 23 million net income to 6 million net income. I think it's because of acquisition adjustments. Like as you see this quarter, they bought a company for 600 million. You want the cash from investing activity to be negative. That means they're buying new assets. If this number was positive, that means they're actively selling out of their own assets. But that's why the balance sheet changed so dramatically this quarter from that huge acquisition. This is a beauty and cosmetics company, and I know they're having a tough time competition with Elf Beauty and stuff, and like Kylie Jenner's brand or whatever. I don't know. But anyway, this is a beauty and cosmetics company. So anyway, like makeup and skincare, stuff like that. And the revenue growth has been phenomenal. It's just the high valuation. If we value them, where's the forward PE here? Yeah, this is the tough part. They currently trade at 190 times net income, and they trade at 41 times next year's net income, which honestly is still a bit expensive. Actually, Morningstar says they're undervalued. Robust operational fin. Oh, well, that's not real analysis. Never mind. Anyway, I don't know. I would. Now's not the time to buy meaningfully, in my opinion. Now's not the time to buy meaningfully, but maybe nibble. My favorite beauty and cosmetics stock is actually Ulta Beauty. This company is a money printer. So as we saw, Elf Beauty lost in net income this quarter. If we zoom out on this company, look at this consistent net income. Every quarter, they're easily making like 2 to 350 million of net income a quarter. And remember, Elf Beauty trade at 47 times next year's net income. This company trades at only 17 times next year's net income. And Morningstar actually does cover this one. They says they're reasonably valued, unmatched product depth, an industry-leading loyalty program with 46 million members, strategic store upgrades expected to sustain long-term growth, balancing the risk of intensifying competition. Anyway, and it's not just Elf that's on a dip. It looks like also Ulta Beauty is similarly down like 30% this year. Hopefully that was kind of helpful. So T3 Defense, DFNS. Oh, we found it. Okay, so we're actually not going to cover this company really. If you look in the top right, they're only worth $85 million. The whole company's worth $85 million. So let's see what the net income was. So yeah, kind of think about this logically. Let's say you buy the whole company for $85 million. Well, you bought a company that just lost $26 million this quarter, which is 30% of your whole investment. Then the last quarter they lost 11 mil, 16 mil. Dang, yeah. And look at this. They've actually never made net income ever. If we look back here, it says they made 100 mil this quarter and 5 mil and 3 mil. Those are all accounting flukes. They didn't actually. So all they've done, that's why this stock is at an all-time low right now. I personally would not buy this stock. And yeah, the revenue is not good either. Dang. Luckily, it looks like they have a decent balance sheet. I almost bet from share issuance. Yeah, they just diluted all shareholders by 200%. Anyway, that's not, if you're looking for a real aerospace and defense company, I'd go with like a Raytheon, GE Aerospace, a Moog or something. So Lemon says, I know Beyond Meat is your favorite, but could you give a realistic breakdown of what's possible? I can. And this is a super sad story. So this is plant-based meat. I like the brand, but this stock, I hate to admit it, but it is going bankrupt. It is going to go to zero. Do not buy the dip on it. And I'll give you my honest analysis on this company. There's a reason 26% of all the shares are being shorted. It doesn't just happen for no reason. There is a real bear case, and let me share with you that. So and this one's a super easy example to understand. If you look in the top right, the whole company is worth $286 million. You could literally buy the whole company for $286 million. Let's say you do it. You just bought a company that lost 41 mil, which is over 10% of the whole company. 107 mil the quarter before, 35 mil, 35 mil, 64 mil. I don't think they've ever made money. Yeah. Oh, they almost did in 2019, but yeah. They cannot sustain these money losses. It says last quarter they made 370 million. Again, another accounting fluke. The business actually lost 107 million that quarter. Yeah, even on EBIT, they lost 90 million. So it was definitely some accounting fluke. So anyway, sadly, that's why I cannot buy Beyond Meat. They literally have lost. The whole company was worth, 280 million? They've lost 200 million just this year. The year before, 150 mil. The year before, another 280 million. So that's the recipe of why stock's at an all-time low. I personally just don't like to buy the companies that lose net income. And and look at the free cash flow as well. Insanely negative free cash flow as well, losing like 150 mil of free cash flow as well. So I can honestly, sadly understand why that stock's at an all-time low. Same with like Lucid. There's a reason all these stocks, like there's a reason these charts look like this. It's real fundamental deterioration. And these aren't the kind of stocks I want to buy the dip on. There's a ton of great stocks with great fundamentals that are also on a dip. Like look at Lucid, for example. Net income, they lose $1 billion of net income every quarter. And they even had some accounting flus. Like it says they lost 500 mil this quarter. They actually lost over 800 mil that quarter. But it's like I can't pay $3 billion for a company that lost $4 billion in net income just this quarter, or just this year, I mean. So that's why I specifically focus on companies' financials, because when I first started investing, I never cared to look at financials, but this is what you honestly want to look at. Like I used to never look at financials. This is one of my biggest losses. So check out ChargePoint right here. I sold all my shares at 62 a share. I sold them after I bought all my shares. Like I bought it all way up here. I bought it at 380, sold all my shares at 60. I sold it for a huge loss. And thank goodness I sold it for a loss as well. Look at that. I sold all my shares there. It's only gone lower. So sometimes it's actually good to sell out of a company for a huge loss, especially when you see trash fundamentals. Like here's another example. Look in the top right, the whole company's worth 142 million. And look at this. They lost literally just this quarter, 40 mil, 50, 60. That's 200 million. So that's how I like to approach stocks. If you like this kind of analysis, please hit the like button. Dang, Apple's now down 6.8% after hours. Amazon's up 8% after hours. So yeah, here are all the stocks that I own in here. I'm definitely not an expert. Don't listen to me. I sell nothing. I have no course book. I don't teach or coach or anything. Only way to learn if you wanted to is just watch the streams for free. We're up 30% all time in that portfolio. So yeah, if you're looking for like a stock with quality fundamentals, like I check out AppLove, and this one's also on a huge like 50% downtrend. But look at this one. Out of every stock on a 50% downtrend, I want to buy the one with 60% plus net margins, record net income, like with this sort of fundamental growth. You know what I mean? Like, so anyway. Who funds Beyond Meat? Great question. That would be the shareholders. They have to keep issuing shares at all-time lows just to stay afloat. What site is this? Hey, or this app I'm on right now is actually a brokerage, just like Schwab, E-Trade. If you want to get the brokerage I'm on, it's linked in bio there. All right, we'll look at a few more here. Dang, I've been live for over 2 hours. I appreciate everyone that's here. I will look at a few more stocks, then I got to run. But I've had a great time streaming today. I try and stream every day. Please hit the like button before you go. It does help out the stream. So here's Vertiv. This is your water cooling company. They specifically do water cooling for data centers. Let's see. Is there any news? Vertiv, analysts cut price target after their earnings report. Huh. I wonder what they did. So they're noting organic revenue grew 17% below the consensus of 23.6%. So that might be it. So Vertiv plans to launch 800 V's DC power products. Okay. Anyway, let's see what their numbers were. They've always been quite expensive. Like even on the dip, they still trade at, well, it's not crazy expensive now, about 32 forward PE or 32 times next year's net income. But yeah, they did slightly miss on revenue, but they beat on net income. So actually margins grew. What I've loved about this company is their pricing power. Like check this out. The revenue grew 24%, but the net income grew by 53%. That means pricing power. Net margins went from a 12 to a 15. Pretty insane. So honestly, I'm not even disappointed with the earnings. They did $1 billion of free cash flow this quarter, record free cash flow. Like if we just zoom out, there's the most profitable free cash flow they've ever had. This is actually their best net income quarter in history that they've ever had. But I think that their organic revenue slightly missed. I think they did some acquisitions. I don't know. Morningstar says they're fairly valued. The multi-decade enterprise migration to cloud and rising AI-driven rack power densities will drive long-term value growth. Huh. Growth was driven by AI and data center infrastructure demand, though slightly below consensus due to project timing. Huh. Interesting there. Actually, 32 forward PE might look time to buy the dip. Oh, let me get to OWL. Yeah, I'm really behind here. I apologize. Let me get to Blue Owl, and we'll look at KBR. I haven't traded Vertiv since 2024. Yeah, that one's interesting. So Blue Owl Capital, this is known as a BDC, a business development company, and they're taxed differently. Like whenever you receive dividends, well, there's so much I have to cover here. So they pay an 8.8% dividend. At first glance, that seems very unsustainable, but this is because of how they're structured as a business development company. By literal law, they have to pay out 90% of their taxable income in the form of a dividend, or else they pay huge 25% plus corporate tax on it. So they're incentivized to have really high dividend yields. But at the same time, whenever you receive the dividends, they're not taxed as a normal dividend. Dividends for me are for, well, it's taxed at 0% for me. Actually, that's what's so cool. But they are taxed, or normal dividends are taxed at long-term capital gains. The dividends they pay are taxed at short-term capital gains, or your income level, basically. Actually, fun fact, this is my taxable account right here. Y'all, I always have to say this because this is true. I thought it was fascinating when I first learned this. Taxes favor the low-income investors. If you make under $48,000 a year, which is me, I make under 48K a year, your dividends are taxed at long-term capital gains. And long-term capital gains tax, if you make under 48K, is 0%. So even in my taxable account right here, all these dividends I receive, like from McDonald's, every quarter I receive $37. Every single dividend I receive in all my portfolios is completely tax-free. The state doesn't tax it. It's not taxed federally. So, and same with long-term capital gains. If you own a stock for over 1 year and you make under 48K, I could literally sell all my Google for 106% gain, $3,100 gain, and it's completely tax-free, even in my taxable account, because it's long-term capital gains. I'm kind of going on a little tangent here, but anyway, back to Blue Owl right here. This is a company that does loans, first lien loans and second lien loans, and the credit risk has been high here, where a lot of their loans are kind of low quality. But anyway, you buy this to maximize your dividend income. You get 8.8% of your money back just in a dividend every year. But historically, you don't get much stock price appreciation. This is actually lower than they were in 2020. So you pretty much get the 8% dividend a year, and like you're prey for 1 or 2% stock price appreciation on top of the dividend. So historically, you probably won't outperform, the tech-heavy S&P 500, but could be a decent way to maybe maximize your dividend income. My favorite BDC, which is the kind of companies that have to pay out most of their income, is actually Main Street Capital. They do a lot of preferred equity. So instead of just first lien, second lien loans, they actually own shares and equity into the stocks. Actually, Blue Owl right here, this was the company that led the 50 billion Meta Prometheus bond, where they own a bunch of Meta debt. Anyway, hopefully that was kind of helpful. KBR. Okay, 1 or 2 more, then I gotta go. Hey, what's up, Iron? Thanks again for showing up. Are you buying Apple stock? No, Apple's still a little too expensive. Yeah, Michael Burry famously shorted Palantir. Yeah, I freaking love Palantir, AJ. So here's KBR stock right here. I've actually not heard of this company before. In the past year, dang, they have struggled the past year. What do they do? So they are a Mission Technology Solutions. Looks like that declined 6% year over year. And their sustainable technology business fell 1% year over year. So that might be the bad news. If we zoom out, revenue only grew 1.6% year over year. The sales, the lifeblood of the company, that doesn't beat inflation, only 1.6% growth. And last quarter it declined by 5, declined by 10, 0.3. So it looks like they're growing at low single digits and maybe even negative. But they're still making good profits every quarter, easily like $100 million net income a quarter. And according to analysts, they only trade, 10 times net income and 9 times next year's net income. I suspect they're this cheap because, they're not growing that fast, but I don't know. I mean, it's interesting here. They also pay a 2% dividend, only a 20% payout ratio. They're an engineering and construction company. Guess we can go, oh, they're trying to get my cookies. Here's their website right here. Okay, yeah, English, please. Mission. Okay, I'm not really getting a great idea of what they do, but maybe they really do just sell like aerospace and defense products. Today's top gap ups and gap downs. Okay. Oh yeah, MCore was a nice little gain. Oh, actually, hold on. Let me check something real quick. It's gonna look weird for a second on the stream. Amazon's up 9, Monolithic Power. So Roblox is down 14, Reddit's down 11, Western, Apple's down 7. Well, anyway, I don't know. All right, KBR stock. Interesting. They're very cheap, 2% dividend. We just want to see that all eyes are on the growth. Good afternoon. How do we get into oil tomorrow? How do we get into oil? Hey, what's up, Joe? Hey, thanks for those little gifts there. I appreciate all the gifts there. My favorite oil stock is like an ExxonMobil. This one grows. It's like one of the literal growthiest oil stocks. It's growthier than Chevron. So yeah, if war fears start to escalate, there are inflation fears, war fears, gold's a nice safe haven asset and usually does good in those environments. So Let's see. Brent crude surges to 100 per barrel on the Houthi attacks and Middle East supply concerns. Um, hmm. Anyway, let's see here. They trade like a commodity. I mean, they're only at a 12.6 forward PE. They only trade at 12 times next year's net income, which is normal for an oil and gas stock. But yeah, look at these forecasts. They're going to do 14.9 billion in net income next quarter. If we zoom out, the net income has never been, oh, except for this one quarter in 2022, it's never been over $14 billion before. And then it's going to be 13 billion a quarter after. There's massive net income growth. Hey, not too shabby here. Historically, these oil and gas stocks don't outperform the tech-heavy S&P 500, but that's not why you buy oil. You buy it for its defensive properties. Whenever tech is usually struggling, usually oil is doing good in those environments. And in the meantime, while you hold them, you get a nice dividend. Warren Buffett owns a lot of oil stocks. If we go to the Warren Buffett portfolio, he has to, all these super investors. Anyone hear the Leopold news? Dude, I never respected this guy. He has terrible holdings, completely liquidated, had to sell all of his stocks today. So this hasn't even updated. Dude, Leopold literally owns the worst stocks with terrible fundamentals. The only decent one is SanDisk. Anyway, yeah, and like Nancy Pelosi, Buffett, Soros, they all have to reveal their holdings by SEC law. But Warren Buffett owns 4% of his portfolio Chevron. Another 4% of his portfolio is in Oxy Petroleum. But yeah. There's some other nichier ones like Powell Industries, like 40% of the revenue comes from oil and gas equipment or oil and gas customers. Kodiak Gas Services is another interesting oil and gas play that I've been watching. What's their forward PE? A 23 forward PE. I was actually deep diving into their investor presentation. This is actually a fascinating company. Wonder if we can find any we monitor methane emissions. Anyway, they make like these mission critical like power generators and stuff. Anyway, I'm Canadian. All my U.S. stocks are taxed on dividends, like 15 to 20%. Hey, I'm pretty sure though, like when this is how it works in the U.S. If you have to pay like if I receive a Canadian dividend or UK dividend, the ADR fee I pay, like the 15% fee, is actually completely a write-off. So it might be a write-off for you as well. Oh no. So let me check Apple real quick. Someone asked about Apple. Yeah, Apple, dang, now down 6.3%. Their valuation was really expensive. Wonder why they're falling. Maybe Apple has received approval in China to ship features of Apple. The thing is, we don't allow Chinese phones in the US because it's all just spyware, but China allows Apple iPhones because they're so safe. Not even Apple has access to the back door. Pretty interesting there. Can't wait to win the lotto so I can hire you. Hey, Joe, I appreciate that. You don't have to do that, though. You can just ask me any questions on TikTok. Actually, there's only one thing I technically sell, and it's for the supporters. I have a private Discord that costs literally $1 to join. I made it $1 simply to prevent bots. But if you become a YouTube member, you get permanent access to my private Discord. It's super active. It's actually a great community now that there's like a lot of people in here. But yeah, if you want to join my private Discord, if you have any questions for me or want personal stock analysis, go to the YouTube stream and go to the description and there'll be a link. It's literally $1 minimum to join. Or if you become a YouTube member, you get permanent access. So even if you cancel your YouTube membership, you still stay permanently in the Discord. I never promote that. If you've ever been to my stream, I never talk about that because I never like to sell anything. But that's the only thing I technically sell. It's a $1 private Discord for the supporters. But anyway, that about wraps up the stream. I've been live for like way too long, well over 2 hours. Apple's falling because of missed earnings. Yeah, dang. Can you do TEM, please? All right, last stock. Oh, hey, what's up, Catherine? Good to see you. Tempus AI. This is a life science diagnostic company right here. So yeah, revenue growth was driven by diagnostics and data and application segment. Let's see what the revenue growth was. The one bad part about this stock is that they lose a lot of net income. They're still quite far away from profitability. But honestly, here's why it's kind of okay for them to lose this net income and why they're still interesting. Whenever you grow in your revenue this fast, it kind of justifies the net income losses. Like revenue's up 36%. Last quarter grew 83, 84, 89, 75. Like revenue's up 36, after grew 75. After that grew 26, after that grew 37. So they're on a streak of growth, but still a bit away from net income positivity. I know Kathy Wood, I believe, owns the stock. Yeah, Morningstar says the severe lack of profitability and negative free cash flow do warrant some caution. Yeah, the free cash flow is a little choppy. So yeah, that's the one thing I'd be a little worried about. But they report earnings tomorrow. Wait, or is it today? Wait, today's the 30th. Wait a minute. Yeah, they're down 1.4% after hours. Yeah, I think they just reported earnings. Huh. Let me click on the news tab right here. Non-GAAP EPS a -4, beats by 11. Revenue of 382 beats by 3 million. Looks like a slight beat there. Stock's slightly down though. China's building an electric car in Mexico. Yeah, I think that's called BYD. BYD is the company. Kia or Kia. Oh, Kia's public. I wonder if this is the stock you're talking about. What is this company? Yeah, Korean motor vehicle manufacturer. Kia. Huh. Kia Soul. Yeah, historically, the cars are kind of a low margin commodity, but they're actually doing decent. When will you be back on? Hey, I'll be on tomorrow. If you want, go on YouTube and click the notification bell to be notified. I kind of don't have an exact stream, but I try and stream every day, usually around 12 or 1 p.m. Eastern time. New York time, it's 6 p.m. for me. I usually stream around 1 p.m. It's my most common time. So yeah, anyway, I hope everyone, TSSI, okay, we'll check out this one as the last stock, and then I'll do a portfolio update. TSSI, I believe this is a micro cap, so yeah, you do want to be a little cautious, because if you look in the top right, they're only worth $273 million. But here's the thing, out of all the companies worth $273 million, I want to buy the one that's making, if you average it out, is actually making net income every quarter. Like, whenever you make like 5 million, 3 million, that's like a couple percent of the whole entire market cap. 2 million or 2.3 million is literally 1% of the entire company they made in net income this quarter. But yeah, the forecasts are supposed to make 1 mil next quarter, 1.1 mil the quarter after, and they've beating on revenue expectations. Analysts are finally covering this one. I'm surprised analysts cover this one because the market cap is so tiny. So I don't know, maybe this is like in the software solution, trusted by OEM and vendors to accelerate deployment. Data center services? Huh. Anyway, maybe some sort of AI data center play. I don't know exactly what they do, but what's the revenue growth rate? I like that they're net income positive and the revenue's up. Okay, actually, that might be something to look into. The revenue actually fell 44% year over year. Maybe there was a one-time adjustment back here, but the revenue fell 44% from 98 mil to 55 mil. But they still made net income on that. Interesting there. But anyway, thanks again for being here. Here's a quick portfolio update. We had great earnings from Amazon specifically. They're up 9.4% after hours. Microsoft did amazing. So yeah, this is the best day I think I've literally ever had. I've never had a higher day. We're up 9.76% just today, which is insane. My Webull portfolio, we're up 3.14% of the day. In open profit and loss, we're up $4,600 all time. Oh yeah, all time we're up 29 grand in here, or like 150%. And here are all the stocks that we own in here. Here's our best performers. We got AMD, which was up 15%. We got Dave, ClearSecure, Robinhood, Reddit, which is down 11. Microsoft up 14. SoFi was up 7%. We bought 2 shares of SoFi yesterday at $15.26. And hey, and now it's $16.50. Nice little rally on SoFi. SoFi's one I nibble on. I wouldn't buy meaningfully yet, but I maybe go ahead and nibble some more on SoFi, especially if it falls, if it unprices in the 7%. Yeah, so we got AbbVie. I think AbbVie reports earnings tomorrow. And then here are our losers. We're down on Futu, which I love Futu. I got Sprouts Farmers Market, Power Solutions, Netflix, and Rollins. Citigroup is actually my most recent purchase. Yeah, here are all my most recent purchases in here in their exact order. So my literal most recent purchase is Citigroup. There's the little B buy order right there. I literally just bought them. So that's that portfolio. And finally, I know I got way too many holdings, way too many stocks, is my dividend-only Robinhood portfolio. In the top left, it's called dividend-only because, as you can guess, every stock in here pays a dividend. I'm surprised we were up 1% on the day, despite Meta dragging us down. Meta fell 7.6% on the day. They had some one-time adjustments because of earnings. So yeah, here's our lifetime percent gain on every stock. The only company we're total return down on is McDonald's. And finally, we have a Roth IRA. Roth IRA is just a tax-free retirement account. So anyway, that was the stream. If you want to support me, there's only one way to support me, and that's check out my YouTube channel. Just type into YouTube Nathan Robert. You'll find my channel. I sell nothing. I just had to ban some people that have the same name and picture as me. Respectfully, I'll never follow you, DM you. I sell nothing. I have no course book, WhatsApp. I don't coach or teach. The only way to learn is on my stream. So anyway, see you soon. Thanks again. Have a great rest of your day.